Good afternoon, friends. I welcome you to this virtual CP meeting on professional opportunities, foreign entities setting up presence in India. I am privileged to have with me Secretary of WRC, CA Murtuzavai Kachwala, Regional Council Member, CA Drushtiven Desai, Regional Council Member, CA Arpit Kabra, technical speakers and experts, CA Saumya Sept and CA Dhaval Trivedi. In absentia, the panelists, Mr. Pramod Gupta, CFO of Suzuki Motor Gujarat Private Limited, Mr. Ashish Kumar, Managing Director of Verbio India Private Limited, which is part of a German group, and Ms. Lucy Lee, Director of PwC Taiwan. At the outset, I would like to thank Dhaval, who helped in inviting the speakers and panelists for this webinar. Friends, we all know that India is a destination for foreign companies. And with the ongoing geopolitical uncertainty with respect to China, our country is amongst the most sought after for setting up business. But the laws in India, which have definitely eased over a period of time, but are still difficult for foreign residents, companies, and groups to understand and comply. When any foreign entity wants to set up its presence in India, chartered accountants are amongst the most preferred service providers. And this creates a lot of professional opportunity for us in this space. Hence, we thought that there is a need to have a webinar wherein we can invite the speakers who can guide us through the compliance requirements, especially with respect to foreign entities setting up business in India. I know you are all eager to listen to the experts, and I would now request my colleague CA Drushti Desai to kindly introduce the speakers.
Thank you, Vishal Bhai. It's really a privilege to introduce the speakers for the session. So we have Saumya Sheth. He is a practicing chartered accountant having professional experience of more than 11 years in the field of taxation and allied laws. His area of expertise is advising clients in areas of corporate tax, international tax, foreign investment, foreign exchange regulations, business restructuring, joint ventures, corporate law, and other regulatory laws. His specific assignments include advising clients on foreign exchange regulation, income tax mergers and acquisition, key litigation matters, transfer pricing, and international tax planning. He's a regular speaker at various industry forums, including ICAI, and also a regular contributor of articles to various professional journals. He co-authored article on FEMA published by Bombay Chartered Accountants Society every month. He has co-authored book on recent development in transfer pricing in India published by CCX, as well as book on interest litigation provisions under 94B published by DCAS. Prior to founding DTSS and Associates, Saumya worked for 10 years in Ernst & Young LLP and KPMG. With this, I welcome Mr. Saumya Sheth to this, August gathering. We have the other speaker for the session, Mr. Dhaval Trivedi. He is a chartered accountant and Bachelor of Commerce, the director with the tax and regulatory practice of KC Mehta and Company. Prior to joining KC Mehta in December 17, he worked with PricewaterhouseCoopers for 9 years. The member of the Institute of Company Secretaries and holds a certificate of international tax course from Institute of Chartered Accountants of India. He had a unique opportunity of being the first Indian CPA to function as India Desk of Taiwan for PwC Taiwan. He has more than 12 years of professional experience in inbound investment assignments, advising on domestic and international tax issues, including PE issues, DTAs, FEMA issues, M&A, advising on secondment agreements, litigation support, health checks, and managing advisory and compliance assignments for various clients. He has been visiting faculty at various commerce and law institutes in the past, and also delivers lectures at ICAI and CP study circles on tax and regulatory matters. so he has to his credit several contributions to articles and in various publications, and that the list is quite long, I would say here. And so I think with this I would present to you P.S. Saumya Trivedi, and we are really honored to have both of the faculties on board. Over to you, Vishal.
Yeah. Thank you, Drishtiben. So I now request Saumya Bhai to kindly make his presentation on the current registration requirements with respect to company law and FEMA. Over to you, Saumya Bhai.
Thank you, Vishal Bhai. Thank you, Drishtiben, for the kind introduction. I think at the outset, kind regards, thanks to the speaker, thanks to the WRC team, Dhaval, and the entire team of WRC for hosting this important session. And as very rightly mentioned by Vishal Bhai, the Vice Chairman, that in the current situation where the entire world's eyes are on India, it is of absolute importance or absolute necessity that as professional brothers, we stand up to this task which the country is expecting of us, and we are absolutely aware that whenever foreign entity is investing into India, what all requirements there are to comply with, and we help foreign companies in investing into India, so that at the end of the day, whatever the vision this government has seen in terms of attracting more and more foreign investments, more so from China in view of the current scenario, we should also give a lending hand and help ourselves, help the country in the broader perspective. With this, I will start today's presentation. The focus of today's presentation is that what are the reporting requirements with regards to foreign companies who want to invest into India under FEMA and Companies Act. Now, friends, I think most of us are aware that what are the basic requirements under the some of the provisions. But as far as FEMA and Companies Act are concerned, there are certain peculiarities, and hence we will go through each one of them in detail. And in the time slot allotted to me, probably I will cover more on certain less known aspects of the reporting requirements vis-a-vis those aspects which are well aware and well covered by most of the professionals. So I think first of all, if a foreign entity wants to set up a business presence in India, there are few options which are available to him as a company. So first is, I would say that foreign entity wants to invest into India as a foreign entity. That means that it will not set up any new entity in India. In that case, under the existing regime, there are three options available to him provided under the FEMA. The first option is liaison office. The second option is project office. The third option is a branch office. Now, as the name suggests, liaison means that when you are setting up an office for liaisoning purposes, that is for meeting customers, meeting suppliers, that is known as a liaison office. It has a short-term requirement and it has a limited purpose. The second type of business presence for a foreign company is a project office. Now, project office means that that office is set up only for a specific project. So, for example, let's assume that a foreign company has obtained a contract in India for building, say, metro, or for building, say, this you can say high-speed rail between Ahmedabad and Mumbai, the bullet train. So for that specific project, they will set up and they will open a project office, and it will be related only to that specific project. The third option is that which is incorporation of a branch office or opening up a branch office in India. Again, branch office is for a limited period. It is greater in period as compared to liaison and project office, but still from a permanence perspective, it is for a short-term period. So you can say it's a medium-term perspective. As far as the second option is concerned, which is that that foreign entity will incorporate a separate entity in India. Okay, now there can be two types of entities which it can incorporate. First option would be a limited liability partnership, LLP, as we say, and the second would be a company. Again, in case of a company, there are two options which are possible. They can incorporate a company either as a joint venture, meaning thereby that they are not holding 100% stake in that company, or second is they may incorporate a company as a wholly owned subsidiary. So these are in general, I would say, options available for a foreign entity who wants to invest into India. Now we will go through each of these options carefully, okay, and we will spend more time on the liaison office, project office and branch office vis-a-vis the other two options, because there are certain peculiarities with regards to this liaison office, project office and branch office. Okay, now as far as liaison office, project office or branch office are concerned, these are the terms which are defined under the provisions of FEMA, which is the Foreign Exchange Management Act of 1999. These are terms which are not defined under the Companies Act, okay, because Companies Act specifically says only a place of business in India. Now there are certain definitions of what a place of business means, but right now let's stick to this three terminology, which is liaison office, project office and branch office. Now FEMA 22R is the main notification dated 21st Jan 2019, which governs setup of a liaison project LO, liaison office, which I would commonly refer as LO, project office a PO and a branch office as a BO. So whenever a foreign entity wants to incorporate LO, PO or BO, he has to refer FEMA notification number 22R, sorry, which is dated 21st Jan 2019. Then there is a master note direction number 10, which is dated 29th March 2019, which governs this establishment of BO, LO, PO. And then there are APDR circulars and FAQs which are issued by RBI from time to time. As far as incorporating an LLP or a company is concerned, company can either be a JV or a WOS. You have Foreign Exchange Management Non-Debt Instrument Rules 2019. So friends, just to give you a brief background, earlier the provisions of FEMA investing into India, what we commonly known as a foreign direct investment, was governed by FDI regulations issued by RBI. The relevant notification was FEMA 20R, which was issued in 2017. Now in October 2019, what the government did was that the power to regulate the foreign direct investment into India was taken over by central government from RBI. So that means as on date, RBI is no longer the approving authority for FDI transactions, and it is the central government which is the approving authority for FDI transactions. And hence, in October 2019, central government issued this Foreign Exchange Management Non-Debt Rules 2019. Non-debt meaning thereby equity rules, equity instruments. So in other words, all investments, equity investments into Indian entities will now be governed by this FEMA non-debt rules 2019 issued by central government. And if any permission is required, any specific approval is required, that approval will henceforth be given by central government and not by RBI. This is a very important change as far as FDI is concerned. Subsequently, post this notification, RBI issued specific regulation, which is mode of payment and reporting of non-debt instruments. What it says is that as far as FDI is concerned, what are the permissible modes of investments and what are the reporting requirements which a company or an entity needs to comply with. So in nutshell, you would say that there is a 100% change as far as the approving authority is concerned of FDI into India, which was changed from RBI to central government as on date. As far as the reporting requirement is concerned and as far as other regulations are concerned, more or less this FDI non-debt rules are in line with the earlier provisions laid down under FEMA 20R. Now, sir, friends, let's first look at the registration requirements for setting up of a LO, BO or a PO in India. Now, before we go on, let's first look at what are the permitted activities for branch office, liaison office or a project office. So a branch office can undertake following activities, which are permitted activities. They are export import of goods, rendering services, professional services, undertaking research work, where the parent company is engaged. Okay, so it is essential that they must be doing research only where parent company is engaged for the same work. So if a parent company is engaged in the research of pharma R&D, then the branch office can support the parent entity for the same R&D function, but not for other functions. Promoting technical or financial collaborations, acting as a buying or selling agent in India, so they can act as a procurement agent for a company or for a foreign company or for a selling for a foreign company, rendering IT and software development services, representing a foreign airline or a shipping company. Friends, most of the shipping companies or airline companies have set up a branch office in India. And the last would be the rendering technical support in relation to products which are supplied by the parent or a group companies. So for example, let's assume that a foreign entity, say a carrier, has sold some air conditioners into India, some high-end air conditioners into India, then it can set up a branch office in India which will provide technical support in relation to the products sold by the foreign company. So friends, these are the list of permitted activities which a branch office can undertake. As far as liaison office is concerned, liaison office, as the name suggests, it can represent parent or a group company. It can promote export and import from or to India. It can promote technical financial collaborations and act as a communication channel between parent company and Indian companies or Indian consumers. Now friends, very important distinction between the branch office and liaison office is, and you would rightly point, identify that in case of liaison office, they can only promote or act as a communication channel or a represent. That means that they cannot undertake any business activities. They are only promoting, you can say, export import or technical collaborations. So they are not permitted by you can say by RBI regulations to undertake any business activities. So it is very important that liaison office is at the very initial stage, at the outside, where company is not aware that how Indian market is functioning. At that step, it is advisable that foreign company incorporates the liaison office to understand the market, to study the market, to see the trends in the market, and once it believes that there is enough potential in this market to develop for export or import or for providing services, then it should go ahead and establish a full-fledged presence in terms of either a branch office or LLP or a company, as may be suited in the respective cases. As far as project office is concerned, as the name suggests, it is only for executing a specific project or a contract that a project office can be opened. So if a project office is opened for a specific project, say bullet train, it cannot be used to do any other activities. Now friends, why this is important is that many times the foreign companies, when we get requests from the foreign companies with regards to what are the permitted activities, okay, this is not a guiding principle, okay, I would say this is kind of a Bible, that anything which is not covered here probably may not be allowed by RBI, and hence it is absolutely important that when we advise our foreign clients that what kind of activities is the liaison LO, BO or a PO intending to undertake, and then as a chartered accountant, as a professional, we should bear in mind and we should supervise their activities to ensure that they are on the right side of the law. Because many times what we have seen is in a practical world that a company would set up a branch office for a specific purpose, okay, and then slowly down the line, say 3-4 years down the line, they would venture into different activities. Now friends, all that probably is not permissible, is not allowed, and is not taken very lightly by RBI, and it levies very high penalties if there are any such contraventions which are there. So we should be careful and we should monitor what kind of activities LO, BO or PO are undertaking. Now, what are the eligibility criteria? So friends, for BO and LO, there are specific eligibility criteria which are laid down. So for a branch office, it has to have the foreign entity which is setting up a branch, has to have a profit track record in the immediately 5 preceding financial years, and has to have a net worth of not less than USD $1 lakh. For LO, the track record is required of 3 years and net worth is $50,000. The limit for LO is lower than BO precisely for the reason that LO cannot undertake any business activities, and hence LO by definition and by its nature will only receive funds for its operations, but it will not be able to generate business or generate profits. Vis-a-vis that, BO ideally would be able to generate profits and would also be able to repatriate those profits overseas. Once these track records are fulfilled, then with the prior approval of the AD bank, you can set up a BO or an LO. However, if the condition is not being fulfilled, then RBI approval will be required. And RBI on a case-to-case basis does give approval if there are genuine reasons for doing these activities. Now, assuming that the track record or network conditions are not being fulfilled of the foreign entity, okay, then if any other group company, okay, or a subsidiary company of that foreign entity, or a parent or a group company, if it gives a letter of comfort, okay, for these two conditions, then probably RBI does allow or AD bank does allow to incorporate a BO or a LO, okay, and they are pretty, I would say, open in terms of accepting a letter of comfort if a foreign entity is a newly set up or a new entity. And in practical scenario, we have seen that many times for investing into India for a specific project or for a specific purpose, the foreign entities, the foreign group set up a new entity specifically for Indian venture in foreign company, and hence they just open a BOLO for testing the waters. So for that initial purposes, probably they may not fulfill this condition because there is no immediate past track record. In those cases, this is helpful condition of obtaining a letter of comfort from the parent entity. Now, if an LO or a BO of a foreign bank and insurance company wants to set up operations in India, then you have a different regulations. What they say is that for foreign banks, they need to have a specific approval from Department of Banking Regulation, RBI, and for insurance companies, they need an approval from IRDA, which is Insurance and Regulatory Development Authority. In such cases, no UIN is required if they want to set up an LO or BO in India. As far as branch office in SEZ is concerned, general permission is given to set up branch office in SEZ, provided they are functioning only in those sectors where 100% FDI is permitted. Now, friends, we will go on this 100% FDI, but just to give you a brief snapshot of this 100% FDI, as you are all aware that recently there were a lot of news in the in newspapers, and amendments were made in the month of April 2020, just pre this India-China clash which happened, with regards to the restrictions on investment from bordering countries. Hence, any investment from entities or companies which are located in China or neighboring countries with whom India shares the land border, they are not under 100% FDI automatic route. Hence, going forward now, for those entities who wants to set up a branch office in SEZ, they will require a specific permission and they will not be covered under this general route. There are two more conditions for this SEZ that they need to comply with Chapter 22 of the Companies Act 2013, which we will come to it in later part, that what are those requirements. And they need to function on a standalone basis. That means that they should not interact with other operations in outside the SEZ. Now, friends, we will come on the eligibility criteria for setting up of a PO, which is a project office. Now, general permission is given for setting up of a project office. Okay. Now, why project office? Because if a foreign company secured a contract from an Indian company, which has all regulatory clearances, when we say regulatory clearances, meaning approvals from all the relevant authorities, okay, then they can set up a project office. But the funding of the project can be either through overseas remittances, okay, that is inward remittance directly from abroad, or it has to be funded from bilateral or multilateral international financing agency, or any company or India which has awarded the project is financed by a public financial institution or a bank for that project. The second criteria is if the contract has been awarded to the foreign company by a government authority or a PSU. So in both these two cases, the general permission is available for setting up a project office. Again, prior approval of ED Bank is required, and if it is outside the scope of this, then you need a specific approval from RBI. Now, friends, we will go on what prior approval of RBI is, where prior approval of RBI is required. Now, prior approval of RBI is required in following cases. First, I would classify as nation specific, that wherever the applicant is citizen or is registered of Pakistan. The second would be a region specific, that is where the applicant is a citizen or is registered or is incorporated in Bangladesh, Sri Lanka, Afghanistan, more importantly Iran, China, Hong Kong, or Macau. Okay, sorry, I think. Yeah, and the applicant is opening up a BOLO in Jammu Kashmir, Northeastern region, and Andaman Nicobar. Now, friends, these are all high security regions, and hence for all these cases, if a foreign entity which is incorporated of these neighboring countries, I would say Iran, although it's not a neighboring country, or Sri Lanka, but you can generally classify that, and they want to set up a BOPOLO in the neighboring areas of India, which is Jammu Kashmir, Northeastern region, and Andaman Nicobar Islands, they would need specific approval of RBI. Sector specific. So if the applicant's business falls in defense, telecom, private security, and information and broadcasting, again specific approval of RBI is required. However, if you have a specific approval from the government of India with regards to the defense contracts, or if you have entered with a defense agreement, or if you have been provided permission by the Department of Publication, Department of Telecommunications with regards to uplinking or downlinking of the information or broadcasting, then no specific approval is required from RBI. The last is organization specific. So if the applicant is an NGO or a non-profit organization or a body or an agency of a foreign government, then they need a specific approval of RBI. However, if the entity is engaged in activities which are covered under the FCRA, which is the Foreign Contribution Regulation Act, then they will obtain a registration under the said act and not under the FEMA. So if it's a charitable institution covered under FCRA, then FEMA does not apply, but FCRA Act applies. That is the specific provision under FEMA. Now, friends, once an LO is open, which is a liaison office, there are specific time period up to which it can undertake its operations. So for LO, the time period is 2 years for companies which are engaged in NBFC sector and which are engaged in construction and development sector. Once this 2-year period is extinguished, is over, no further extension can be granted for the remaining period. So after the expiry of these 2 years for NBFC and construction and development companies, they have to wind up the LO. For companies which are engaged in other business, the time period or the validity is 3 years, which can be further extended by a period of 3 years subject to fulfillment of certain conditions. As far as branch office is concerned, there is no validity period. It can continue its operations as long as it is doing its permitted activities in India. And PO, they can continue the project office till the tenure of the project. So once the project is over, the tenure of the project is completed, they have to wind up the project and they have to go back. So for example, let's say a foreign company, say a Japanese company, has set up a specific project office in relation to the bullet train project. Then what will happen? That once the bullet train project is completed, they will have to wind up the project office and leave India. They cannot transfer that project office to another project office. And automatically, there are certain rules and regulations with regards to the transfer of the assets post closure. But once the project is closed, they have to wind up the project office. Now, friends, the most important requirement, which is the registration requirements. What are the registration requirements for LO and BO under FEMA and Companies Act? And I will take both of them together because under the Companies Act, ideally the requirements are not too detailed, and they are, I would prefer that in simple words, they are pretty liberal and pretty simple, for the simple reason that it is not a separate entity, but it's a part of a foreign company. So first, I think before an LO or a BO is opened, they need to file an application in form FNC to AD Bank for opening the LOB or PO, LO and BO, which is other than for banking and insurance. For insurance companies, the application has to be in IRDA FIC 1 form. And for banking companies, there is no specific form which has been prescribed. So they need to file an application to the Department of Regulation, RBI. Once this form is filed to the AD Bank will check the form, will review the form, will ensure that all FEMA regulations relating to incorporation of LO and BO are complied with. If it feels that everything is fine, the second step, it will forward that form to the RBI for allotment of UIN, which is known as the unique identification number. RBI again will review the form and check whether all conditions are fulfilled. Once it confirms, it will allot the UIN and it will ask the AD bank to inform that to the applicant company. Step 3, that once the AD bank intimates the UIN to applicant for opening the LOBO, the applicant foreign entity has to open the LOBO within the period of 6 months from the date of receipt of the approval. So that means that once you get an approval for opening an LO and BO, it is a time constrained approval, which is for 6 months. This validity is only for 6 months. If within 6 months you don't approve, you don't open the LO or BO, then ideally the approval will lapse. However, AD bank does have the power to grant an extension, one-time extension for another 6 months if there were conditions beyond the cases, I would say beyond the applicant's case. So probably there may be certain cases in the applicant because of which it is not able to open an LO or BO. In those cases, it is possible that AD bank can grant a one-time extension. But any extension after that, so for 6 months time period provided, after the expiry of 6 months, AD bank can grant one-time extension. That means for 6 months, so total 1 year. So after the period of 1 year of the date on which you receive the approval, if you are not able to set up the LO or BO, then you need to go to the RBI for any further extension for the approval period. It is possible, and practically we are saying it, that if you don't fulfill or don't open the LO or BO in 1 year, RBI asks to file a fresh application. Step 4, once you have opened the LO or BO, what happens is that you can open a bank account for undertaking your business activities or for undertaking prescribed transactions. Now, LO can open only one bank account and BO and PO can open multiple accounts subject to obtaining approval from AD bank. But as far as LO is concerned, they don't have an approval to open more than one bank account. Also, they can undertake only prescribed transactions. We will not go into what all prescribed transactions are there, but broadly speaking, in the earlier slide where we saw what are the permitted activities for LO, BO and PO, for those kind of activities, they can receive the funds in India. Step 5, which is that once the LO is open, then they have to inform ROC in Form FC1 within 30 days of its establishment. Okay, so this is the requirement under the Companies Act 2013. Chapter 22, what we saw earlier. So under that, they need to file and Form FC1 within 30 days of setting up of a LO and BO. And subsequently, they also need to apply for a pen-based DSC for authorized signatory or POI holders. Thereafter, we will go on to the annual compliances, which are there under the Companies Act. So once LO, BO or PO are incorporated, then an annual activity certificate, which is commonly referred as AAC, is to be filed for every financial year ended 31st March on or before 30th September before the RBI. And what the statement contains, that statement primarily contains that what all activities the LO and BO and PO did undertake in that 1 year. And this form is to be filed every year annually. Mostly the contents are related to the activities of the branch, and it's a detailed form where what kind of turnover, what kind of services you provided, the cost structure if it's a branch. For liaison, there will not be any income. So for liaison, it will be mainly related to the cost activities. All that details needs to be filed. If the year end for this LOBO or PO is anything other than 31st March, then within 6 months from the end of the year, whatever it is, say June or December, so within 6 months from the end of the financial year, they need to file this AAC with the RBI. So this is first compliance, annual, I would say. The second annual compliance is they need to file annual return in Form FC4 with the ROC on or before 30th May every year. This annual return again is, I would say, kind of an annual return which we file for the companies. It is similar to that, but has certain differences. The third compliance, annual compliance, is filing Form FC3 before ROC on or before 30th September every year. Now this Form FC3, what does it contain? It contains the list of projects or list of offices which have been opened up in India by the branch or an LO in India. So wherever they have opened the offices, all that list needs to be submitted. So with this, I think, friends, we have come to the close of the reporting requirements as far as setting up of an LOB or PO is concerned. And we will now go on to the setting up of an LLP or an Indian company in India. And before we go to that, I would like to pause here for a moment and highlight one important point here, that if you look at it, this annual compliances for an LOB or PO is concerned. Okay. Now, please bear in mind that whenever you are opening up an LOB or PO, once you obtain a specific approval, it is only for that specific LOB or that specific place. If you are changing the place to a different city, okay, or doing up certain new activities, you need to obtain a new approval from RBI every time. So it is only for that specific place. However, within the city, if you are changing a location from area A to area B, you don't need a specific approval. You just need to intimate the AD bank. Now, friends, with regards to the incorporation of a separate entity in India, as we saw earlier, there are two options which are ideally possible. First is incorporating of a company, which may be either a joint venture or an wholly owned subsidiary. The second is incorporation of an LLP. And we will quickly go through the FEMA requirements for both of them. As far as Indian company is concerned, probably FDI, as we commonly say, foreign direct investment, is broadly covered under automatic for most of the sectors. However, there are few sectors where it is prohibited, which are, say, lottery, gambling, chit funds, nidhi, trading in TDRs, real estate or construction of farmhouses, manufacturing of cigars, cigarettes and tobacco substitutes, and activities which are not open to the private sector investment, that is atomic and railway, other than which are permitted activities. Similarly, foreign technology collaborations in any form, including licensing for franchisee, for gambling or lottery, is prohibited. Now, one important point here is that with regards to the real estate business, generally what we understand is real estate business does not include construction. So if there is a construction and development of townships, of premises, of buildings, that is not considered as the real estate business, and hence FDI is specifically allowed in those sectors. It is clarified in the FEMA. There are few sectors where it is restricted, such as print media, multi-brand retail, single brand retail, broadcasting, private security services, telecom services, pharmaceuticals. Important. Pharmaceuticals, it is permitted up to under automatic route up to 74% in brownfield, and in greenfield it is permitted up to 100%. Now, when we say greenfield, it means setting up of a new unit, a new pharmaceutical company, new you can say manufacturing company is called greenfield, and investing into an existing setup is known as a brownfield. So if a foreign company wants to invest into an existing Indian company which has a facility in India, manufacturing facility, it is considered as a brownfield, and automatic route is only up to 74%. Beyond 74%, if FDI is to be made, you need specific approval of RBI. Now, post April 2020, as we mentioned earlier, FDI is allowed only under government route, So even for 1% FDI, it is only under government route from following countries with whom India shares boundary: Pakistan, Afghanistan, China, Nepal, Myanmar, Bangladesh, and Bhutan. Now, friends, we all know that this ideally is restricted only majorly for China, because we have hardly seen any investment coming from the other countries. Now, there is no clarification with regards to investment from Hong Kong, which ideally is a separate territory forming part of China. But our experience shows, and on a ground level, it is advisable that you take prior permission of government with regards to any investment from Hong Kong. This is what is the stand being taken by the government. Although under the FDI regime, currently, if you look at it, every year government publishes the records for FDI country-wise. There, Hong Kong is shown as a separate country. Even double tax avoidance agreement (DTAA) is separate with China and separate with Hong Kong. However, now in the current situation, it is advisable that any FDI coming from Hong Kong-based entity should also be covered under the government route, and you should take prior permission. Sri Lanka does not share land boundary, it's a sea boundary, and hence it is not covered. Now, any investment from anywhere across the world where beneficial owner is a resident of the above mentioned neighboring countries will be under the approval route. So for example, let's assume, and practically this is happening, that you will get investment from a Singapore company. Now in most of the cases, what we will see, that which is the entity which is investing into India. We will not go behind that to see and check who are the ultimate shareholder in that company. Now under the new law, which is amended from April 2020, what they say is that you need to see who the beneficial owner of the investment in Indian entity is. So if the beneficial ownership of the Singapore entity is a resident or is an entity of China, then that will also be under the that will also be covered under the government route or the approval route, and it will not be under the automatic route, even if the company is a Singapore company investing. So now we need to go beyond what is mentioned and to see the ultimate capital holding or ultimate structure. Now, frankly, beneficial ownership is not defined. So whether beneficial ownership means 10% interest, 20% interest, we have different norms under PMLA, Prevention of Money Laundering Act, under SEBI, and as under FEMA. Under FEMA, sorry, there is no definition of beneficial ownership. Frankly, what we advise to our clients, and practically a view which is being taken, is that any ownership of more than 10% should be considered as a beneficial ownership. And if your ownership is ultimate owner of which is a resident of a China is holding more than 10% through one or several companies, okay, then it will be under the approval. And whatever is the FDI, so even if there is a 1% FDI, it will still be under the approval route. There is no threshold that any investment above a certain limit has to be under the approval route. Currently, only FDI is covered, that is foreign portfolio investment is not covered. And when we say portfolio investment, that means ideally investment in listed companies or to be listed companies. So if a Chinese investor wants to invest in a listed company or to be listed company, then they can do so, and there is no government approval at this stage. Now, what are the eligible instruments? Equity shares, fully and compulsorily convertible debentures, fully and compulsorily convertible preference shares. They are all classified as FDIs, partly paid up shares, warrants, put and call options, but there should not be any guaranteed return to the investor, and depository receipts. So this is with regards to incorporation of a company. As far as incorporation of an LLP is concerned, any person resident outside India other than citizen of a Pakistan or a Bangladesh can invest in an LLP. But LLP can operate only in those sectors where 100% FDI is permitted under the automatic route without any conditions and without any restrictions. Hence, investment by a foreign entity in an LLP which is engaged in a construction sector is not allowed, because there are specific conditions for a construction or a development sector. You need to comply with certain conditions when an FDI is there in a construction company or a development real estate company, so as to say, commonly defined. So an LLP can't do a real estate development activities. Similarly, LLP can't undertake multi-plant retail because 100% FDI is not permitted under the automatic route. Similarly, investment by companies where beneficial owner is resident of the neighboring countries, including China, then those entities cannot set up an LLP even for those companies where FDI under 100% was erstwhile allowed. So for example, manufacturing of plastic goods or manufacturing of toys, that is under 100% FDI currently. But if the ultimate investor is a beneficial owner of a China or a neighboring country, then it will be under the approval route, and because it is under the approval route, they cannot incorporate an LLP for making that activities. Investment can be made by way of acquisition of a profit share, or what we say is either acquiring a profit share from an existing partner or investment through capital. Now friends, what are the reporting requirements? Now I would like to focus here mainly on the reporting requirements for FEMA and not under the Companies Act, because Companies Act, ideally I would say that most of us are aware what are the annual requirements or annual filings as far as company and LLP is concerned. For FEMA, it is important that whenever an LLP or a company receives consideration for equity shares or for profit share, the allotment has to be made within 60 days of the receipt. If not allotted, then please refund within the next 15 days. If you don't do it, then there are penalty which will be levied by RBI. And RBI is very particular on it. Even for a single day of delay, even if it's a Sunday or any other day, it will levy penalty. So please don't wait for 60 days. As soon as you receive the shares or consideration for share capital or profit share, please complete the requirement and please report to the RBI as soon as possible. Allot shares within 60 days. Immediately upon the allotment of shares, maximum within 30 days, you need to file Form FCGPR and undertake other compliances online through the portal, firms portal on firms.rbi.org.in. And this needs to be filed within 30 days. Any transfer of shares, including profit share for LLP between resident and non-resident, and it also includes buyback. So whenever an Indian company is undertaking buyback of shares from its foreign shareholder or a non-resident shareholder, that also has to be reported in Form FCTRS. Okay, and this is something which generally we see is missed by most of the cases. So any transfer of shares from resident to non-resident, as well as buyback of shares from a company from its non-resident shareholder, needs to be reported in Form FCTRS within 60 days of the transfer of shares or receipt of consideration, whichever is earlier. And most important, you need to file annual return or Form FLA on or before 15th of July every year. So this is also a requirement which most of us probably, I would say, in certain cases we tend to overlook as far as compliance under FEMA is concerned. So friends, I think with this I have tried to complete the entire topic of reporting requirements for a foreign entity for setting up a business presence in India through LO, liaison office, branch office, project office, or LLP or a company in this short time allotted to me. With this, I think with the permission of the remaining chairman, probably we can take up. Is there a time for few questions, sir?
Yes, Saumya, we have received a couple of questions. So can we take that? Yeah. So the first question is, LO and BO can apply for opening, whether LO and BO can apply for opening bank account in India, then what are the documents bank will require?
Okay, so generally, once you obtain the specific permission, which is a UIN, once you obtain a UIN, thereafter banks will require very basic documents with regards to the opening of bank account, which is the foreign entities constitution, foreign entities balance sheet, financial statements, and the purpose of your operations in India. So it's not a very detailed documents. Majorly, most of the documents or most of the information is captured in Form FNC. Apart from that, there are hardly these basic documents which are required, and basis that once we submit, the bank account is immediately open.
So maybe the next question is relating to LO. That please explain procedure for closing of LO.
I would suggest probably it's a very detailed process in terms of the closing up of an LO, and we can take an entire session on that. So in nutshell, I would say that once you open up an LO and you need to close it, there are certain forms which you need to file and certain compliances which needs to be made before the RBI. And what essentially RBI checks is that whether you have filed the AAC, that is annual activity certificate, and undertaken all required compliances under the FEMA, and there are specific prescribed forms which you need to file. Once you submit all that and RBI is aware of it, that there are no further requirements, they will give the permission to close the LO. But it's easier said than done. So probably with it would be recommendation that if you want, we can take a separate session only on LO, BO, and PO, where we can take entire topic in much greater detail in terms of acquisition of property, also in terms of winding up, in terms of you can say profit repatriation from India, what is permissible and what are the permissible debits and credits.
Sure. Soumya, the next question is that whether we need fresh registration if the AAC is not filed in time by a LO.
We don't need a fresh registration if AAC is not filed, but ideally what RBI says that RBI does compounding, so compounding proceedings needs to be undertaken, and all the past years you file a AAC and get complied with the law, because today or tomorrow RBI will definitely come to know which LO is not filed it. So better to make all compliances and pay compounding penalty and get it regularized.
Whether LOBO can be set up by loan of an Indian financial institute.
No, LO or BO cannot set up by way of loan from an Indian financial institution.
We'll take up this question, and then we'll have Dhaval, and I would request Saumya if you can also to stay back, so that if there are any questions post Dhaval's presentation, you would be there to kindly answer them.
Sure.
Yeah, so I'll just ask this one question which has popped up, is that an application has been made for FIFP approval. What is the next process for wholly owned subsidiary company? And the holding company is Hong Kong based, owned by an Indian non-resident individual.
Okay, so if right now the overall atmosphere is that any investment from an Hong Kong based entity is subject to the government route or the government approval. Now we are aware that wherever the ultimate beneficial owner of the Hong Kong entity is an Indian company, is an Indian individual or an NRI, as the case in the queries has asked, in those cases probably the permission is being granted by the ministry. But all this is currently being vetted not by RBI. As I said earlier, the power to vet is now being taken over by the government, central government, and central government is now looking at it and is clearing it. So they would essentially clear it if the ultimate owner is the non-resident individual.
Yeah, Arpit, you want to ask? Yeah.
At the outset, thank you, Vishal bhai, and Saumya sir, a fantastic session. I think really very critical inputs that you've given, and quite a knowledgeable session. I've got some quick questions. I've got on my personal WhatsApp, so people who are following, they've given fantastic feedback. They've also sent some question. Sir, there's one question: how to distinguish between a real estate business and a construction?
Okay, so when we say real estate business, that means that when you are buying and selling of property, when you are doing, I would say, renting is not included. So if you are constructing a property and giving it on rent, that is not a real estate business. But merely trading in real estate or trading in TDRs is a real estate business. And when you do a construction, that means you are actually constructing a residential premise or a commercial premise or a hotel or an infra project. That all is a construction and development, which is permissible, subject to certain conditions.
So real estate is not permitted in that sense, trading of TDRs and all of that, but
yes,
construction
yes,
is. So therefore, okay.
So if you are trading in real estate, you are buying properties, selling properties, that is not allowed under FDI.
All right. Thank you. Over to you, Vishal bhai.
Yeah. Thanks, Saumya bhai, for an excellent presentation. And I understand this would go definitely a long way in creating, like I said, professional opportunities. Member would be more confident now responding to such questions that their clients or associates might be asking. So thanks, and we'll again see you after Dhaval's presentation. Yeah, Arpit.
Yeah, thank you.
Saumya, one more question. Sorry, this has come up, and it's a very good question. I think. Do you see any impact of LLP conversion? From company structure under this entire scheme that you mentioned, the conversion of company to LLP. Any impact on that?
Okay, so what will happen is that if an existing investment is in the company and that company wants to convert into LLP or vice versa, okay, it is essential that FDI up to 100% is allowed under the automatic route for the company which is engaged in the sector. So for example, if a company is engaged in a business in which 100% FDI is allowed under the automatic route without any conditions, then that company can be converted into an LLP. Under the automatic route, no specific permission or prior permission is required. We just need to inform the RBI upon the conversion. That's it. But if there are restrictions, and if the company which is operating has restrictions as far as FDI is concerned, either restrictions or is not under 100% automatic route, then it can't be converted into an LLP.
So any some popular sectors that you feel that this is a problem there, any challenge, any sectors that you would know
So I think
about?
for trading there is a challenge, for construction there is a challenge. Okay, similarly for multi-brand retail or a single brand retail there are challenges. Right. And more so now, wherever you had existing Indian companies, where you had foreign investors which were beneficial ownership was in China or neighboring countries, all of them, if they now want to convert into LLP, now they can't do it because FDI is not allowed under 100% automatic route for those entities now. So they are stuck. They will have to remain with the company structure going forward.
Thank you.
Yeah, thank you, Saumya. Dhaval, if you can come on screen.
Thank you, sir. Thank you, everyone, for patient hearing.
Yeah. So Dhaval is here, and he is going to take us through the registration process with respect to the direct and indirect taxes. So over to you, Dhaval.
Sir, I just need to share my screen if you can give me that, right?
Sure.
Is the screen visible now?
Yes.
Okay. So thank you very much for this opportunity. Thank you, WIRC. Thank you, Vishal sir. Thank you, Arvind bhai. I think it has been a very fantastic session so far because I've always believed that when a foreign company is planning to set up its business in India, the first and the foremost thing that needs to be looked at is the exchange control regulations, whether the exchange control regulations permit you to come to India or not. I think that is the starting point. So for us as professionals, it is very important that we look at the basic law first and then we move at the secondary laws. So exchange control regulations are the first law, then you look at company law, and then you come at tax. So a business will always precede tax. So firstly, whether the government of India allows you to do business or not is something that one needs to be aware of. Only after the answer is yes, then you have to come at the secondary questions. With that, I will start the session. So what I'm going to cover today are three topics broadly: direct tax registrations, GST registration, and other related registrations. However, before we plunge into direct tax, just to give you a backdrop as to why for professionals like us, which includes a mix of young professionals, newly qualified chartered accountants, as well as experienced professionals who are now going to deal with foreign companies in India, why is it important and why are we having this session today? I think if we answer these 5 questions properly, it will give us a roadmap in terms of what should we be doing as professionals when we are assisting foreign companies in India. So the first and the foremost questions, and trust me, these are very broad level questions from a 70,000 feet. But if we are able to answer these questions, then when we go into the minute aspects of it, which I've dealt with in the later part of my slide deck, we'll be able to easily answer those minute questions. So the 5 questions are: is doing business in India easy? The perception says no. But what is your thought process? What is your experience? Is doing business in India easy? Are our registration processes really rigid and time consuming? Because if you take a survey, most of the answers would be that the registration processes in India are quite rigid and time consuming. Is that really so? Where is the gap? If your answer to the other question was no, they are not very rigid and time consuming, then where is the gap? And if the answer was yes, it is indeed time consuming, then again the question is where is the gap in terms of your expectations versus your client's expectations. Then comes the most important question: can we as professionals bridge that gap? Is it possible to identify the loopholes, the gaps, the bumps, and then bridge the gap? And if yes, how do we do it? So these are the 5 questions that should come into our minds when we are looking at supporting foreign companies, especially foreign companies. I'm sure these questions are relevant for each client of ours, but when we are looking at foreign companies which are looking at investing in India, these 5 questions become all the more necessary. So with this backdrop, now when we look at each of the slides, I would request that each one of us keeps these 5 questions in mind. And so now I move on to direct tax registrations. The slides that I have compiled, these are not going to be very technical in terms of the broad level processes, but we will try to share some practical experiences and the practical aspects that are necessary. You may feel that taking a permanent account number is quite easy, but is that really so? So today what we are going to deal is, both from a direct tax as well as indirect tax perspective, what are the basic registration requirements for a foreign company operating in India, and within those processes, how could we bring ease? How could we give a comfort to our clients? So I would like to put it this way. When we are looking at direct tax registrations, we basket our clients into Indian companies, foreign companies, and individuals. So the reason why I put them into 3 baskets is, if you are supporting an Indian company, say for example, which is a subsidiary of a foreign company, there could be different aspects that one needs to consider. If you are supporting a foreign company directly and not its subsidiary, then there could be different registration requirements. And completely opposite, if you're not supporting any particular entity, but if your client is an individual, what is it that we need to keep in mind? So from that perspective, we'll look at the next slide. From an Indian company's standpoint, in what all areas will there be registration requirements which will be required? So if I look at it, say for example, A company Japan has a subsidiary in India, B Private Limited. Now, if I look at it from the perspective of B Private Limited, the first and the foremost is, my company has foreign shareholders and it has got overseas related parties. So there are cross-border transactions. So that is the first thing that we need to consider. Second, because it is a subsidiary of a foreign company, there are bound to be foreign directors, people who are not residents in India or are foreign nationals. And third, keeping the directors apart or aside, there will be expatriates who will be moving from the foreign company to the Indian company. So if our client is an Indian company, the registration requirements will be necessary for these aspects: foreign shareholders, foreign directors, and expatriates. When you are looking at it from a foreign company's perspective, so say for example, your client is not B Private Limited India, but ACO Japan. What is important from the perspective of ACO Japan? Whether the entity in itself requires a registration from a direct tax perspective. That is the first question. If I am supporting the foreign company, who should be their authorized signatories and foreign directors? Third, if they are getting certain payments from India, from a cash flow perspective, how I as a consultant could bring value to them. There are new provisions about equalization levy, wherein the liability is now on the non-resident, on the foreign company. And last but not the least, depending on the type of projects which the foreign company gets in India, say for example, Saumya mentioned about a project office and somebody getting a project for the high-speed rail, there could be foreign nationals who would come to India without having an Indian company. For them also, there could be certain registration requirements. And that's why when you are supporting a foreign company directly, these are the aspects that you need to consider broadly before you even approach that client or before you start your discussions with the client. So our thought process has to be clear. The third that I mentioned in my earlier slide was individuals. Say, for example, you are not supporting the foreign company, you are not providing services to the Indian company, but your client is a foreign individual or a non-resident. In that case, why would it be important to look at the registration requirements? First, that individual could be a director in an Indian company. When I move on to the next slide, I'll discuss about the registration requirements. Such an individual could be an authorized signatory for a foreign company or an Indian company, we do not know. And third, that individual could be an expatriate. So he could be a foreign national who would be coming to India. So now if you look at it from that individual's perspective, so the idea is, how do we take this opportunity as professionals to provide services to these foreign companies? And are there really opportunities for us? So as I said, the way we should look at it is, there are three baskets. Within the 3 baskets, there are subsets. So there are opportunities for us, and it will depend upon what all issues are the companies, be it a foreign company or an Indian company, or the individuals facing, and how can we handhold and provide support to these clients of ours. So looking at it from this perspective, now we go into the minute aspects of it, having looked at the broader perspective. So when you have to obtain a permanent account number, so as I said, when there is a foreign entity and an individual, a permanent account number is required. When so there is a separate form 49AA for foreign entities as well as foreign nationals. So that is the first thing that we need to understand, that there is a separate procedure, a separate form. There are options. There is an online option, there is a physical option. Within the online option, we have two further options. First is using a DSC to file the application online, and second, we do not go for a DSC. In that case, what will have to be done is, we first fill the form online, take a print of it, submit the whole set with the team facilitation center. The good point here is that because you are submitting it online, it gets verified, and only then you submit the physical documents. Vis-a-vis when you actually do a complete physical process. Details in the application form are quite relevant. Signing instructions are very important whenever you are supporting a client. The practical issues that we generally face when we are looking at a permanent account number form, online form, whether it is really easing out the process. As I said earlier, the online form becomes relevant only when you are using a DSC in order to save time. Otherwise, you are doing a duplication in terms of filing a form online and then submitting a physical copy with the team facilitation center. There are a lot of representations which are being made, especially in COVID times, that the PAN applications for foreign companies and foreign nationals should be made completely online. But as of now, there is no such benefit which has been given, and hence we as professionals come into picture in terms of helping our clients for applying for permanent account number. What we have generally seen is the signatures. It's a very simple instruction that the signature has to be within the box. What we need to understand is that the foreign person or the foreign company is not aware about the Indian laws. Having this in mind, we need to approach the client for a particular document. And that is where you need to preempt and tell them that these are the instructions which are to be followed. This is very important, supporting documents. This is very theoretical. For supporting documents, when you are looking at an individual's case, if a national is your client, you need 2 documents, proof of identity and proof of address. The rule 114 is very clear in terms of what is the requirement. Could be a passport, could be a citizenship identification card for proof of identity. And for proof of address, it could again be passport, or it could be bank account statement, or if the person is an employee, it could be FRRO registration. So I think the rule is quite clear. The issue arises where one tries to interpret the rule to his or her own advantage. And that is where we come into picture. Before we move on to the practical aspects, what are the supporting documents for other persons? We looked at the case of individuals. Now for other persons, there are 2 documents which are relevant. Copy of certificate of registration issued in the country of residence, and registration certificate issued in India for setting up an office. Now coming to the practical aspects or the practical issues that one generally faces, and this is where we can bring value for our clients. When you are looking at an individual's case, while passport is allowed as a proof of residence, we have seen many a times that passports do not have residential address mentioned on it. If at all, in certain countries, the passport contains address in a handwritten manner. So the person whose passport is there, the person would have himself mentioned the address with his pen. Now, the government does not accept such documents as a proof of address. The passport would be very much valid as a proof of identity, because the first page is very much printed by the government, and hence it acts as a proof of identity, but it may not act as a proof of address. Now, if we just call for it and submit it to the tax office, it will take another couple of weeks and you will get a rejection. Then we go back to the client. It takes a lot of time, and hence being proactive, we should verify these aspects and then go to the client saying that the passport in your case may not help, even though the law provides for it. So the officers at team facilitation centers refuse to accept citizenship cards. So as I mentioned earlier, in case of individuals, citizenship identification card is also a valid proof of identity. However, the process differs from each team facilitation center to each team facilitation center. So generally, accepting citizenship cards becomes quite difficult. We have to show them the rule book and then explain to them. They insist on bank statements for proof of address. And in absence of time, we have no option but to keep on roaming for the correct team facilitation center to accept our documents. In case of companies, what happens is, because it is written certificate of registration, it says copy of certificate of registration issued in the country. It does not say certificate of incorporation. Now, the team facilitation center officers are not aware about the difference between certificate of incorporation and certificate of registration. So they'll keep on insisting on certificate of incorporation. Here, when you ask for the document from your client, it is very important to verify the document to check if the document is a certificate of registration or not. If it is a certificate of registration, we should be in a position to explain to the team facilitation center that it is acceptable and should be accepted. Now, some countries do not issue certificate of registration. Some countries issue business licenses, which has an expiration date. Very important to note. In certain European countries, there is no certificate of registration, there is a certificate of business license. Now, if there is an expiry date, it may not act good. It may not hold good as a proof of address. And that's why it is very important for us as professionals to verify the documents properly. The next two bullets are very critical. Translation and notarization. I think that is quite important. Whenever you are working for a foreign company, the documentation that you need to get from abroad have to be notarized and attested. There is a difference between attestation and getting the documents apostilled. In certain European countries, the process that is followed is apostilling the documents. So the Indian law allows us to do both. Whenever the other country is a member of the Hague Convention, we can go for apostillation. If it is a non-Hague Convention country, then we have to go for attestation by the Indian embassy. There are certain high costs involved over there in that country, and therefore telling the client that this process has to be followed irrespective of the cost is very important. Another practical issue that we have seen, and which is very important for us to keep in mind, is that OTP for generating e-PAN card is only received on Indian numbers. So even if you are applying for a PAN card for a foreign individual or a foreign company, if you want the PAN card in an e-form, see, what is the issue that arises here? If you want a physical copy of your PAN card, generally you mention the address of the foreign country, and at times it does not get dispatched or it gets lost. That's why there is a need to generate e-PAN card. However, that can be generated only if you have mentioned the Indian mobile number, because you have to log in onto the website and get it done, because there is an OTP that gets generated. Now, what will happen is, if you do not have a mobile number which is Indian mentioned in your initial application, then you will not be able to generate e-PAN card, and you will have to apply for a duplicate copy. So that will again be time consuming. And that's why it is important that all the necessary details that are required for a PAN application are properly mentioned or collected from your clients. Tax account number. Now that we have looked at permanent account number, let's move on the other registration, because we are currently focusing on registration requirements. The other registration is tax deduction account number. Now, ideally, is the foreign company required to obtain tax deduction account number? The normal TDS provisions generally do not apply to a foreign company. However, if you look at the sections from 192 to 195, no section or few sections mention that the deductor has to be a resident. But in most of the sections, there is no such requirement. For example, section 194J, when you are paying professional fees. Because the normal tendency or the normal understanding is that a foreign company is not required to have a TAN, we at times may miss informing our client that tax deduction account number is relevant. Say, take another example. A foreign company has sent employees to India on a project, say a high-speed rail project. The salary of that employee is taxable in India. Then the foreign company needs to deduct tax under 192. Even in that case, a TAN would be required. So understanding the client's India business plans are quite relevant. Once we understand the client's business plan, we will get to know if a PAN is required, yes, whether a TAN is required. So for example, payment of salary, or as I said, professional fees. For 194J, there is an exclusion by way of a clarification, by way of a civility instruction, which says that if you are making payments to certain professionals like lawyers and accountants, the foreign company does not have to withhold tax under 194J if it does not have a place of business, which means that in two situations there could be an obligation. One, where there is a place of business of the foreign company in India, and second, if the services are such which are not falling under those limited items that are mentioned in that instruction. In those cases, there could be a possible view that 194J may apply and 10 would be required. It's comparatively quite a simple form from 49B. I would not go into the much details. It is a simpler form compared to PAN. The only issue here is, the only issue and relevant issue is a 10 application does not take foreign address. Ironically, this could create a lot of issues because, say for example, the foreign company does not have a permanent establishment in India. If it has a permanent establishment, there is no harm in providing an Indian address. But what if there is a foreign company which does not have an Indian address? Say for example, the transaction of sale of shares. One foreign company is selling shares to another foreign company and TDS is applicable. The foreign company needs to obtain 10, and in the 10 it will have to provide an Indian address. The corresponding issue that could arise is, if that company provides an Indian address, practically, is it possible to get an Indian address? Yes, because you may at least have, because there is an income which is chargeable to tax in India, that means you have some direct or indirect connection in India, and that connection could help you get an address. But is it so easy? Because if I mention an Indian address, there is a possibility that tomorrow tax officers may question and say that you had a permanent establishment in India. And that's why it is important that when you talk to your client, we clearly tell that this could be the possible repercussions. However, currently the way the law is, there is no option but to provide an Indian address. So that is for tax deduction account number. Having gone through the tax registration requirements, now let's look at tax filing requirements for a foreign company. Ideally, whenever there is an income arising from India, there is a tax filing requirement. So a foreign company is no exception. Even a foreign company which has an income from India is liable to file tax returns in India. There are exceptions provided. What is the exception? The exception is there are dual conditions that need to be satisfied. The first condition is the income that the foreign company earns in India should only consist of income which are taxed on gross basis. For example, royalty, fees for technical services, dividends, interest, under section 115 capital A. So that is the first condition. So what gets out? If it is a PE, then you don't get this exception. If there is no PE and your income is only in respect of those specified 4 incomes, then you can get an exception. However, it comes with a secondary condition. What is the secondary condition? The secondary condition is that the TDS which was supposed to be deducted on this payment, say a foreign company gets a royalty, or okay, let's take the example of royalty. So what will happen is, in case of India, the tax rate is say 10% now. If the treaty provides for a low rate, say 5% or 7%, and one opts for a treaty, then this exception may not be available. Why? Because the language is that if there is a tax deductible at source, the rate of such deduction has to be the one which is specified under the Act for the taxability. So if I'm taking recourse to a treaty and not going by the Act, then I will not get benefit of this exception. So there will be a need for the foreign company to file tax return in India. Another important point is, it says rate of such deduction should not be lower than the rate specified under the Act for taxability. It does not say for example, the rate of TDS is 20 under the schedule, but under 115 capital A, the rate of tax is 5%. If I have deducted the tax at the rate of 10% as per DTAA, I am still fulfilling this requirement because it talks about the rate for taxability. It does not refer to the rate under the schedule. So this is quite technical and very important. And that is why I'm saying that for each case, we should do a proper analysis and provide advice to our clients. And again, the crux lies in providing clarity to our clients upfront. The next question is transfer pricing compliance. Do transfer pricing compliances apply? The answer is yes. Transfer pricing compliance is applied to a foreign company. For example, if I have opted for the exemption, as I mentioned earlier, if I have opted for the exemption, I am satisfying the conditions. I say, okay, I don't need to file a tax return. However, if the transaction why I have received royalty or fees for technical services, if that income is with a related party, does it still exempt me? Well, there is a lacuna in the law. There is no specific exclusion for this. So a possible view is that once you have got an exemption from filing tax return, you also do not need to do transfer pricing compliances as a foreign company. However, technically speaking, Form 3CB and Section 92 does not provide for such an exemption, and hence a case-specific analysis again becomes crucial. Who can be a signatory? A non-resident director or an authorized person having PAN can file tax returns for the foreign companies. We should preempt and be prepared about the signatory who will file the tax returns. Many a times we wait till the last, and then there is an issue with the DSC registration, and therefore identifying the person who should be the signatory is quite important. What are the requirements for digital signature while filing tax return? Say for example, you are helping a foreign company on a gross basis. In that case, the foreign company's foreign director, he can have a DSC which is not PAN encrypted. Only in those cases, a non-PAN encrypted DSC is fine. You can still file their tax returns. But in case of companies wherein the person is also a director in an Indian company, or the person is also receiving income from India, and because of which it is mandatory for him to obtain PAN in India, then PAN encrypted DSC is relevant. So this distinction between PAN encrypted and non-PAN encrypted DSC is quite relevant. So we should keep that in mind. So that with that we are done with the registrations required under the DirectX part and the practical issues that we should take care of. While I'm not an expert on GST, but I've tried to cover certain aspects of GST from a holistic perspective. So from a GST perspective, there are two types of registrations that one can have, especially when we are looking at a foreign company. The first one is non-resident taxable person. If one has to relate broadly, a case of a no permanent establishment under income tax could broadly be relatable to a non-resident taxable person under the GST law. And a foreign company which has a permanent establishment in India, that could be related to a normal taxpayer under the GST law. So broadly, that is the comparison that I would want the audience to bear in mind. Generally, when it is a foreign company, it does not require a GST registration unless, say for example, there are certain transactions wherein the foreign company is actually undertaking a transaction within India. Say for example, there is an exhibition in India, and after that exhibition, that person needs to sell the goods from within the exhibition place to a customer within India. In this backdrop, the provisions of non-resident taxable persons have been introduced under the GST law. There were similar provisions under the erstwhile VAT law, as well as under the GST law, talking about casual taxable persons. A non-resident taxable person is a casual taxable person. What is the threshold? There is no minimum threshold. So the limits of 20 lakh and 40 lakh do not apply. Even for a single rupee of transaction, if the transaction has happened within India, registration is required. You need to compulsorily have an Indian authorized signatory. You cannot have a person who is a foreign national. You need to have an Indian authorized signatory. The person has to be resident in India. If the foreign national is present in India and has a PAN, then he can be the Indian authorized signatory. There is a specific form which needs to be filled up online. It has to be applied for 5 days prior to the date of commencement of business. The other negative point is you have to pay all your tax liability in advance. So under the GST law, if you are taking a NRTP registration, you have to estimate your liability and pay it in advance. The limitation is, and why did I say that it is similar to a case of a no permanent establishment? It says the registration is valid only for 90 days. So only for a small period of time, one can take an NRTP, which can be further extended by 90 days. So in total, you get a time frame of 180 days to deal with, similar to an income tax law. So if the non-resident is doing business in India for around 180 days or less, then one can think of opting for NRTP. The next point is, if an NRTP registration is taken, the non-resident will only be eligible for ITC in respect of imported goods. Why is it so? Let's refer to the example that I said about exhibition. So with that backdrop, the provisions were introduced. So the idea was that a person who generally comes to India only to show the products and casually sells a couple of products. That's why, because the products were brought into India, the ITC will be eligible. So, however, if a person is doing some more business within India and sourcing goods from within India, ITC would not be available. What is the practical issue? The practical issue, as I said, Indian authorized signatory is required, and the contact details are also required of the Indian authorized person. So it is very important to identify the right Indian person whenever you are advising your foreign client. What are the documentation required? I think that's quite simple. The last point is important: an address or place of business in India. So as we saw earlier in the first bullet, the non-resident who does not have a fixed place of business can opt for NRTP. However, ironically, when you look at the documentation requirements, it says you need to provide proof of address or place of business in India. So, the place of exhibition is something, for example, you can give an NOC from the person who is the owner of the place. So that is something that one can provide. Now let's take the case of a normal taxpayer. Somebody who does not become eligible for NRTP, who, for example, is going to be in India for more than 180 days. Can he go for NRTP? I'm told that under Maharashtra law, the Maharashtra authorities have issued a circular saying that if the business period is going to be more than 180 days, then you cannot opt for NRTP nor seek for an extension. You have to compulsorily go for a normal taxpayer registration. Again, there are certain declarations that you need to file. For example, PAN, mobile number, email address. Then there will be a temporary reference number which will be generated, and then you file the Part B. So it's like the normal GST registration that we take. Whether a foreign, so the idea is, what is the corollary or the analogy that we can draw? A foreign entity which does business in India for more than 180 days will ideally be deemed to have a fixed place of business in India, and that's why they need to get a registration as a normal taxpayer. So that is where the difference lies, and that is what I would want us to keep in mind. Again, documentation requirement, certificate of incorporation, photos of promoters or partners, photos of authorized signatory. As compared to NRTP, the documentation requirement is more, and you may need to give a lot of details about your foreign company. Again, letter of authorization has to be given to an Indian person. Legal ownership document for principal place of business. If the foreign company has an actual place of business, you provide the proof, or you may provide an NOC or a rent agreement. Either other verification of authorized signatory or physical verification of premises. So to start with, if you are providing other verification of the authorized signatory, then there may not be an immediate physical verification of the premises. It could be delayed further, and you could save time in getting the registration. To change, a practical issue that is important is, say, because you have to identify an Indian authorized person, and say, for example, that person leaves the organization, but that person's DSC is registered on the GST portal. Now, what will happen is that person will leave along with his DSC, but then when you want to change the person in the GST portal, you will have to get in touch with the earlier person so that you can use his DSC to change the person. So if there is a need to change the authorized signatory, it should be planned in advance so that there is no ruckus, no issue, no chaos in terms of getting the DSC from the earlier authorized person. Now let's look at certain other registrations which are required by individuals. Because we are dealing with expatriates, and because while it is not completely related to the direct tax or GST law, I thought it was important for us to at least get an understanding broadly of what are the registrations required and where are the opportunities lying for us as professionals. As we have seen, a lot of multinationals, especially from the eastern part of the world, have been setting up subsidiaries in India and have been sending expatriates into India. That has opened up a great area of opportunities for us. I would say not in terms of helping them get the visa, but after they enter into India, there are a lot of areas where we can help these foreign individuals. So, for example, immediately on arrival of that expat into India, if that person is coming on employment visa, say, then within 14 days of arrival, that person needs to get an FRRO registration. And prior to FRRO registration, there are a lot of processes which are to be followed. Currently, and while the government very clearly mandates in its website that do not go for consultants or agents, however, a lot of companies are currently not aware about the process, and that is where on the back end of it, on the as a support team for the client, we can help the client in terms of getting the FRRO registrations done. There are various other registrations which are required. For example, exit permit. If a person is going back, there is an exit permit which is required. These provisions are governed by Ministry of Home Affairs, and it is very important for us to evaluate if we can support companies in these areas. A typical employment visa case, what will happen is the expatriate will take an employment visa. He will arrive in India. He'll file a Form C. A Form C is a basic document containing the arrival and stay details of the expatriate. Many a times we have seen that in Form C there are a lot of mistakes that are being made by the company itself, and that's why it becomes important for us to ensure that these mistakes are not made. Then within 14 days, as I said, FRRO application is to be made. Once you get the registration, then you do the routine compliances for the expatriates. FRRO is not a one-time process. It has to be renewed on a periodic basis, goes in sync with the visa. And once the person exits, there is an exit permit. So from an expat perspective, this is the whole cycle that one needs to keep in mind. And at each stage, we as young professionals could be of help to these individuals. Documentation requirement, again, there is a whole host of documents and details that are required for the FRRO registrations. Very important that these details and documents are in sync with the details that were filed at the time of getting the visa. And therefore, because the visa would have been applied in their home country, when they come to India, it is important for us as professionals to ensure that there is a sync and no mismatch, or else there could be issues like risk of permanent establishment for the foreign company in India. For example, the employment contract. So it is very important that the employment contract is properly drafted. That is where we as professionals can add value. And during the course of the registration, again, as I said, communication is going to be the key, including communication with FRRO officials. The officials have been quite decent, quite good in terms of understanding our issues and helping us sort them out. So that is where we can add value to the clients. Broadly speaking, what could be certain other areas where we can be of help to our clients? In the initial phase, this is apart from the direct tax and indirect tax, except for the clearing, the last closing part. Registration for land acquisition, registration with local authorities under different laws. The last point is important. Like Saumya we said, for neighboring countries, for countries with which we share land border, there are new requirements of prior approval from the government. Similar is the case for bidding certain projects, which are government projects. If the bidder or the Indian subsidiary is belonging to a group which is from a country which shares land border with India, there is a clear new registration process with the government. We as professionals can venture into this area as a new area. Ongoing, again, purely from a registration perspective, it could be just like changes to various registrations. There could be certain business specific requirements wherein we can add value. When they are going back, there could be certain tax clearances which are required. If you are closing a company, again, there could be tax clearance which is required from the government. If it is a foreign company which has a PO or a LO, before you get a final approval from the RBI, you need to obtain a tax clearance certificate. That is an important step that we may miss out at times, and it is important for us to keep in mind. Similarly, for exit of expatriates and other individuals, there could be assistance which we as consultants should provide. What should we be doing? We can plan in advance. As I said, communication is the key. Explain to the clients that government, this is the requirement of the government. So at our end, as a consultant, there has to be a strict review process. Draw a process in consensus with the client so that you and the client are in consensus, a clear consensus, and there is no mismatch in terms of expectation. Yes, if we are aware about the client's business and the overseas law, because we are dealing with foreign companies, if we have a basic understanding of these two things, then it could be considered as an added advantage for us. What is the simple process that one may follow? So, as I said, if I have to start, what should I do? There has to be a clear and concise initial email for information to the client. There has to be a step plan with tentative timelines that I should share with my client. Continuous dialogue. When we are dealing with MNCs, continuous dialogue is very relevant. There has to be a clear, for example, a PAN application. There has to be a clear email with instructions. Then we should call for scanned documents. Get the scanned documents printed, get it verified by the authorities. Then give a confirmation to the client that yes, the documents are proper, and only then ask for hard copies. If we ask for hard copies upfront and then there are certain mistakes in the documents, then it takes a month. And that is where there is a perception that there is no ease of doing business in India and a registration takes 4 months, whereas it could be done within a period of 1 month. And if we set the processes right, we could definitely save on time. and then we submit it with the authorities, we follow up with the authorities and provide status update to our clients. So I think broadly, these are the steps that we should be following. I think with this, I would like to end my session. Thank you once again for the wonderful opportunity. I hope this session was informative. Thank you.
Yeah, thank you, Dhaval. Saumya bhai, if you can also switch on your camera so that we can go for the question and answers session or this Dhaval, the question is that can the foreign company pay its employees coming to India and rendering its services in foreign currency? What would be the provident fund and other statutory compliances for the same?
Sure. So while the question is a combination of exchange control regulations and labor laws, I would try to answer the question. A foreign company which has a place of business within India will be considered as an establishment in India. So from a provident fund perspective, if the person has not been deputed to the Indian company, but continues to be on the payroll of the foreign company, and that is what I'm assuming in this question, then in that case, if the number of employees functioning out of India increase or go beyond the threshold, the foreign company is still under an obligation to get the PF registration done. So that is point one. Can the expats be paid in foreign country? There are different ways and means in which an employment arrangement can be structured, especially between a foreign company and the expats. For example, a portion of the salary could be received in India, a portion of the salary could be received in their home country itself. Now, that is very much possible in case of expatriates coming to India for a short term. Even for expatriates, what we have seen is that if they come to India on a long-term basis, they may still have a structure wherein a part of the salary could be paid in their home country. So to answer the question broadly, there is a possibility to pay to the expatriates in foreign currency outside India, in their home country.
Yeah, Saumya bhai, would you like to add anything to that with respect to the FEMA perspective?
Can you just repeat the question? I lost you in between because the network was not good. Sorry.
Yeah, no problems. So the question is, just a minute. Can foreign company pay its employees coming to India and rendering in services in foreign currency? And what would be the provident fund and other statutory compliances for the same?
Okay. So I think what Dhaval rightly mentioned in as far as PF and other compliance is concerned, he rightly mentioned from a FEMA perspective, I think FEMA does not come into the picture in this way. So if a foreign entity is making payment of salary to the foreign employees outside India, that is fine. Just to add one point, if for a persons who are deputed to Indian operations, Indian companies, so as to say, expatriates, if they are earning any foreign salary in, any Indian salary, the amount is paid into Indian bank account. If they want to repatriate that amount, that also they can do it. The salary income can be repatriated abroad without any restrictions.
Yeah, thank you. The next question is, Dhaval, are you there?
Yeah, I'm very much here.
Ajay, your video just switched off. So
yeah, just a minute.
Yeah, the next question is that are BOLO liable to file returns? If yes, then which one? And will the BOLO have to file with transfer pricing for any compliance? If so, what are the formalities?
I think that's a very relevant question. So generally what happens is, as Saumya bhai has explained in the earlier session, that the foreign company could have a branch office, a project office, or a liaison office in India. Now, so I would like to dissect it in two parts: a liaison office vis-a-vis a project office and a branch office. If it is a pure liaison office, a tax return is not to be filed. An annual return in form 49C is to be filed with the income tax office. So that is point one. When we are talking about a branch office or a project office, because they generate taxable income in India, that's why they need to ensure that they file tax returns in India like any other foreign company. The foreign company, as I said earlier, if there is a project office or a PE, they need to obtain PAN in India and need to do the tax filing compliances. The second question about transfer pricing, As I said, liaison office, if it is functioning purely as a liaison office, no need to undertake transfer pricing compliances. However, if it is a branch office or a project office and there are actual transactions happening between the branch office or the project office, a form 3CEB has to be filed. One could rely upon the profit attribution study and also undertake a transfer pricing compliance.
Right. I'll move to the next question, which says that if an Indian company, which is a wholly owned subsidiary of European Union company, EU, it gets reimbursement of its expenses of salary, rent, and other expense, does it need to raise invoice to its parent company?
Yes. So I think this is a very much a tax question because every time there is a cross-border transaction between a parent entity and an Indian subsidiary, and whenever there are secondment arrangements, there are these cases of reimbursement of costs. And for reimbursement of costs, because there will be two implications, it could have an income tax implication if there is an element of markup attached to the reimbursement. So one needs to be very clear that these are pure reimbursements and with no profit element. Secondly, even from a transfer pricing perspective, even if it is not an income or a transaction which has an income or an expense, it would still need to be reported from a transfer pricing perspective. So the documentary evidence with supporting papers in terms of how you have arrived at the value of the reimbursement is very important and critical.
The last question is that if a Singapore-based company has directors in India and the artists do the work in India, for making the salary payments to be done from separate bank account or from director's account, are there any restrictions?
Saumya, would you like to take it from a FEMA perspective?
I think I am missing because some audio. There is some problem with the audio, so the voice is breaking. Sir, can you repeat?
Can I repeat the question? I'll repeat the question, Saumya bhai.
Yeah.
That a Singapore-based company has directors in India and the artists do the work in India. For making the salary payments to be done from separate bank account or from director's account, are there any restrictions?
Okay, so the Singapore company, if it is having directors in India, and if the work is being undertaken in India, it can directly make the payment, or it should directly make the payment from the Singapore bank accounts directly to the persons who are working in India, the artists who are working in India, and not from the director's bank account. The reason is under the FEMA, a resident, which is a director, because he would be staying in India, he would be treated as a resident. A resident cannot enter into any transaction for or on behalf of a non-resident, which is a Singapore company. So director basically cannot enter into a transaction on behalf of the Singapore company, and hence the transaction has to be directly between the Singapore company's bank account and the artist's bank account in India.
Dhaval, would you like to add anything on the direct tax perspective in that?
I think again, because the income is getting taxed in India and it becomes taxable in India, that is while I'm not looking at the treaty for now, there could be possible exemptions, but because the income becomes taxable in India, there has to be a withholding tax which needs to be done before the payment is made.
Saumya bhai, now this is the last question. I know I said the last before this, but then another one has just popped up. So, and this is in continuation of the earlier question with respect to that Hong Kong-based company. So the subsequent question was that FIFP has received clearance from the Ministry of Home Affairs, MHA. Now, what next after FIFP approval?
So I think once the FIFP approval, so you get the approval after, because MHA is the nodal authority here. Once they approve it, and once you get the approval from FIPB, then you can foreign investment board, then you can issue the shares, and you can go forward, allot the shares, and do the necessary form filings in terms of FCGPR or FCTRS as the case may be, and proceed further.
Sure. Thanks, Saumya bhai, and thanks, Dhaval. I would now request Murtuza bhai to kindly propose a formal vote of thanks.
Thank you, Vishal bhai. Let me thank CS Saumya said, for covering like all the registration aspects under the Companies Act and also the like FEMA and FIPB aspects of it, and Dhaval for covering all the direct tax and indirect tax. And friends, really, with the current environment in the globally, like there are a lot of US organizations who are looking forward to coming to India and either starting their establishments or even like maybe the growth, additional whatever capacity they're trying to build here. And it is like a real journey on which we need to handhold them. And once you handhold them while they are coming into the country, I'm sure this journey is going to be there for like maybe 10-20 years. And as a practicing chartered accountant, we can be involved in multiple things along with them. And it really starts with like what they have covered today, both the speakers, like is one part of it, but there is a lot more. So these entities want to even know, okay, like where should they set up a factory? Is there someone else from globally or some other player in that industry who has done some setup, and like what are the past examples? And maybe from land cost to labor cost to X to Y, and where are the ports and how the transportation will happen, what will be the logistic. So there is a whole range of services which can be provided, and who better than a chartered accountant? And I'm sure the glimpse of all of these has been provided by both the expert speakers, Saumya and Dhaval today. And I'm sure we are also waiting for the panel, all the panelists here. I welcome them. So Hui from, and then Mr. Pramod Gupta, and even Mr. Ashish Kumar. And Dhaval is going to be the moderator. So I'm sure we can have a lot more questions, and the panel, the learned panel will answer that. But before that, let me thank again Saumya and Dhaval, and I request all the participants to carry it out with a loud round of applause. Thank you. The Saumya and Dhaval, on behalf of WRC, we thank you and we are extremely grateful.
Thank you so much.
Yeah, thank you, Gurtu. Friends, we move on now into another interesting session, which would be a panel discussion on ease of registrations and doing business in India, the practical aspects. And as panelists, we have right from the east to the west, with India right in the middle. So we have with us Ms. Lucy Lee, Director of from PwC Taiwan. We have with us Mr. Pramod Gupta, the CFO of Suzuki Motor Gujarat Private Limited. So, Madam Lucy would be like representing the aspects with respect to Taiwan. Mr. Pramod Gupta would be representing the aspects with respect to Japan. And we have Mr. Ashish Kumar, who is the Managing Director of Verbio India Private Limited, which is a German group. And so he would be giving his views from a German perspective. And so we have the whole ambit. And definitely we have with us Dhaval, who would be moderating the session. So I would now request, so I welcome all of you on behalf of WRC. And I would now request Dhaval to kindly introduce them and take charge of the panel discussion. Over to you, Dhaval.
Thank you so much, sir. I think it is indeed an honor, and I should say I'm privileged to be sitting amongst this esteemed audience right now, including the members from the WIRC. Today, for the panel discussion, we have three stalwarts, if I may use the word that way. We have three stalwarts representing different parts of the industry or the consulting world. We have Mr. Pramod Gupta, who is the CFO at Suzuki Motor Gujarat Private Limited. He comes with an experience of almost 3 decades now. He has been working with the auto industry and working with companies from across geographies, be it Japan, US, Europe, right now with Suzuki. I'm sure if given a chance, he could set up his own company which could manufacture a car now with 30 years of experience that he has got. We welcome you, Pramodji, for this panel discussion. Thank you so much for agreeing to be a part of this panel. We have Ashish ji with us, Mr. Ashish Kumar. He is the managing director with Verbio India Private Limited. He has a unique combination of qualities, if I may put it that way. Currently, he is a managing director with a German subsidiary in India. but he also carries with him an experience of more than 15 years in the consulting world. He has worked extensively with, for European companies working in India. And I will miss it if I say that I feel honored that I'm talking to somebody who has served the Indian Navy for almost 7-8 years in the past. So we welcome you, Ashish Kumar, for this panel discussion.
Thank you.
And at last we have Miss Weihua Lee. We may call her Lucy. She is a dear friend and a director with PwC Taiwan. She has done her CPA from the US and also from Taiwan. She holds dual CPA qualifications. She had started her career in the audit and assurance practice. Currently, she is a director with PwC Taiwan and helps Taiwanese companies that are looking at investments across the globe. She has assisted in outbound investments in almost all Southeast Asian jurisdictions, including Philippines, Malaysia, Indonesia, India, Korea, Japan, you name it, and it's there on her CV. So I think we've got three great people on the panel today, and each one of us will try and understand about their thoughts on India. We welcome you all. So the idea for the panel discussion today is that while Lucy is from PwC, she will share her thoughts as a consultant. What is it that she feels should be done in India? Ashish ji will share his experience from both the sides of the table. And Pramod ji, because he has been with the industry for so long, he will help us understand certain aspects of the business fraternity. So I think to start with, broadly, I would like to share get some thoughts from three of you in terms of the ease of doing business in India. I think we'll start with Pramod ji. If you can share your brief thoughts about the ease of doing business in India, and over the years you have seen how MNCs look at India. What has changed over the years, Pramod ji?
Yeah, thank you, Dhaval. Thank you, Dhaval. See, the thing is, over the year, if we see in last 5 years, the government has done a great job, and in case of ease of doing business, now we are making systems are more simple, more transparent. Earlier, which was not there. So I think things are improving now on a day-to-day basis, and government is planning to stop the revenue leakage as well in that. So I think it's a good atmosphere currently in India, and we are attracting a lot more investment, and maybe a lot more investment is going to come.
Right. Ashish ji, your thoughts on this, on the ease of doing business in India?
Right. Hello, Dhaval. Hello, everybody. Thanks for the question. I think, Dhaval, if we say, let's look at the positive aspect first. The responsiveness, what we see today in terms of government, from the government, whether it is at the center or at the state level, that definitely has become extremely positive and professional. But the fact also is that we rank, I think if I'm not mistaken, we are number 63 now as per the latest rankings.
That's true.
And I think, we often kind of confuse between ease of doing business and ease of setting up business. The ease of setting up business is a very entry related topic. And that is where I think a lot of energies are being put in at the moment, because of course we want to attract investment. So we are doing everything possible to get foreign investments in. But I think the story starts once the company has set up its business. So when we use the term ease of doing business, I think there is still a long way to go over there, when things can be, done a lot more professionally and in a more transparent manner. So I'm taking the liberty to be a little bit more critical, because the very fact that we all have assembled here is because that definitely there is a scope for improvement, and that's why we need some ideas, right? So that is one point. And I also see that there could be a significant amount of improvement especially when we are interacting with non-English speaking countries. And we'll probably talk about this a little later as well. And yeah, I mean, let's start with this. I would say on overall, it's definitely positive improvement, but the fact of getting the doing business part of it, I think there is still a lot of work which needs to be done over there.
Sure. I think that was a very important distinction that you brought out: ease of starting a business and ease of doing business. I think that is where we need to shift our focus to now. And I'll continue from where you ended, as in the ranking of India in terms of ease of doing business. India is around 63rd in the current list, whereas Taiwan is in the top 15 if I look at the ease of doing business rankings worldwide. So with this, I would like to ask Lucy about her experience working with Indian counterparts, and when you compare Taiwan and India, how do you relate ease of doing business?
Oh, sure. Thanks, Dhaval, and thanks everyone for having this opportunity to share my experiences. So I think during the past few years, getting understanding of how the tax works in India is getting easier, I would say. For instance, there's a significant change in the indirect tax part, right? But other than that, I think to non-English speaking countries like Taiwan or China, still a lot of resources are non-Mandarin driven. So really, companies are hard to get into it, or at least hard to understand in a broad aspect exactly how it works. Doing business in India, I think that's still a part that needs a significant improvement. I think that's true, but I think during the past few years there are more and more Taiwanese companies that see the opportunities in India, so they are interested, but I think local resources are still limited, and at least limited to only specific areas, such as Mumbai, or those like the key areas that have some more information. But other areas of the country still we have quite limited information. Yes, I think that's quite pity of it, but still we hope to see more improvement. Yeah.
Got your point. I think a couple of very important points that you mentioned, and I'll try to link it with what Ashish mentioned a couple of minutes back. You mentioned about the language issues, the language barriers being one of the most critical issues when India is dealing with countries from the eastern part of the world, especially China and Taiwan. I think that is where it forms a part of that larger basket which we call doing business in India. Because when you're doing business in India on a routine basis, you will need those logistics issues or the language issues or the language barriers to sort out. So I think that was a very good point that you brought out. And the other important point that you factored was about the cities. There is a concentration in larger cities. A lot of foreign companies or Taiwanese companies are not sure about the other parts of India. I think that is where the government needs to, and I think the government is already taking steps, but needs to focus more on the geographies that it wants to now present to the world in terms of a more developed area. I think that's quite relevant, Lucy. Thank you. Pramodji, I move back to you. I think
Dhaval, I just want to add here. Hello.
Yes, Pramod san, please.
Yes, Dhaval, before I just want to add it here. See, as Ashish has said, ease of doing business or ease of setting up of the business. Now, if you see in the last 5-6 years, the way government is working towards to make ease of doing business and ease of setting up of the business, like government brought this kind of changes, faceless assessment. Even they are try to implement paperless and faceless custom clearance as well. So I think those are a very good point. Government is brought into it. And the thing is, earlier the government has not done the things which is supposed to be done maybe 50 years ago, which we are doing it now.
Got your point, Pramod. I think that is where. Yes, please go ahead. Please go ahead.
And in fact, the bringing the transparency in the system, making people responsible. You know, when we went to DGFT, so now they are saying, okay, this is my timeline. I will respond before that. Now people are relying. Now government officers are working like this. Government is trying to fixing up the responsibility of each and every government officers. Okay, when do you need to do? What is your date and timings? You have to complete your work. Earlier, those kind of roles and responsibility has not been defined.
Got it.
And on the other hand, government trying to curb the revenue leakage as well, which is, we know, yes, it is happening in our country. Maybe, but we can say this foreign multinational, they never wanted to do such kind of wrongdoing, but still it is happening in our country.
Okay. Okay. Understood, Pramod sir. I think so we kind of have a slightly differing view coming there from Pramod san, while Ashish ji feels that for doing business in India there's a lot more that needs to be done. If I have to reconcile, I would say that Ashish ji expects a bit more, and Pramod ji feels that the government has at least started doing something in terms of doing easing out the way of which business is done in India. So I think that is how I would like to reconcile and put it there. But yeah, it's good to see that people like you feel that the government is actually taking steps. I would believe that you have focused more on the regulatory aspects in terms of the indirect tax registrations or processes from the customs perspective or the tax audit part. I think that is definitely one part of it where the government is focusing on. But I'm sure there are other areas where the government needs to shift focus to. Thank you for your inputs, Pramod san. With this, I'll continue with you. I think because you belong to a multinational group, which is a Japanese group, Suzuki, of course, everybody knows about it, and then the cultural differences is something that we are very much aware of. So because you are in India and you have worked with them for so long, how do you try and reconcile the differences that you see between the way the Japanese work and the way the things happen in India?
See, Dhaval, since last maybe around 27 years, I am continuously working with all the multinationals. Okay, and my experience is continue with the multinational. And again, I am here. I am the first person who has joined this company, and I have started registering this company from the date I am here. And you know, if I tell you frankly, the Japanese people are very simple. They are very honest. You know, when we started our organization, we were discussing with the Stency or maybe Citibank about okay taking facility. So you know what their heads have told us: if your SMC CFO just tell us on verbal basis, we will confirm your limit. Then our Japanese said, what do you mean by promotion? They are asking verbal. They said no, just means if their SMC CFO they just call us for tea, coffee, and they just tell please give us the facility whatever they wanted. So we'll give you, we don't need any kind of guarantee and sort of things. So this kind of commitments, even other people understand their commitment, and they are very punctual, and what they want that everybody should be punctual in India as well. So that is, you know, we are lacking here. We are not a punctual. That is the liberty what we have it. That is the liberty what we have it. And in fact, they are very committed people. They are very sincere people, and they obey their old rules and regulations. And they want us to follow the rules and regulations. I'll just give you the one example. Maybe you must have heard that in the last budget, Carotar, CAROTAR has been implemented. Like it has been announced, custom administration rules of origin. Right?
Right, Pramod. Yes,
so, so now when it came to the announcement, so we discussed our Japanese that this is going to come. And now this 21st September, it has been implemented also. So we have asked, okay, last year we have taken this much of benefit under this scheme. If we are not able to get this kind of documentation as required by Government of India, so we cannot, we have to lose this preferred benefit, duty benefit. You know, then his question comes, why? How can Government of India implement like this? I said, no, this is not you and me who can decide whether this is right or wrong. This is what the government decision. In case of anything, reconciliation is required. Let both the government has to work. Let both the government has to decide. The only thing is when you go to a Japanese person, You have to do a thorough study on your subject, what you are going to do. Every Japanese company, they have 5 why steps. So they start asking why. So you have to be ready with all your what kind of questions might come to you and how can you answer those questions, and try to avoid communication differences. If let's say you discuss and he agreed on that, but you don't have anything in writing, so better to you give us from your side, okay, we discussed this thing and we agreed on it, so this is how we are going to do it. So these are what I'm saying, these are very clear, and they are people who willing to adopt the law. They are the people who willing to accept the law and fulfill the requirement of the law. They never said, even I'll tell you, started from the Ford, my first company where climate system, where Ford and Maruti joint venture. They never said you don't follow. They said you please follow your rules and regulation. No multinational will tell you that you don't follow the rules and regulation law of the land. Everyone says you please follow the rules and regulation of the law of the land.
Sure.
So the thing is, what we feel, you have to be very clear before you go, before you do any study, before you want that this is new thing is going to come, this is how we are going to tackle it. So they want everything should be in very clear and transparent manner. It should be everything should be in stepwise. Okay, who has to do what, when, what date it has to be done. So they are so thorough, and they are very simple people, and they are see, they doesn't work like in a American culture, hire and fire. They doesn't have this kind of thing. Otherwise, in American culture, hire and fire. If you are not meeting their objective, they fire you immediately. So these are a good people.
That was too straight, Pramod-san.
Yes.
Please go ahead. Sorry.
So I would say these are a good thing. We have and they respect everyone. And our earlier MD, he used to take his car, he used to go to the plant for round. Whenever he see 10 people are standing, he stop his car, he get down. Okay, what happened? Sir, we are thinking like this. We are doing like this. No. We do like this. This kind of people they are. They never differentiate whether who is worker and who is managing director.
Right.
So they doesn't have that kind of thing. So they are very sincere people.
Right.
But the only thing is, when you want to discuss with them, you have to very clear what you are going to discuss, and you have to very clear. You have to be ready with the 5 why answer. Okay, what answer could have come?
Right. I think.
Though the differences are there in both the angles, their laws are different. Our laws are different, and language barrier, yes, it is there. But now I would say language barrier in our age of people, they've started talking in English, and in fact now 10 to 15 years down the line, their younger generation, they are studying in all the English language. Because last time when I get that SMC auditor, he said, promotion, I have completed CPA. I am a CPA and I done it from USA. So now they are also started thinking that if you have to sell your product globally, if you have to work globally, you have to sell your product globally, you have to be global. So now they have started thinking to that lines as well.
So I think
so that's what I think.
Sure. I think very interesting. Firstly, I would like to thank you for being so clear, and you speak out of your conviction. I think that is something which I really appreciate. I think you answered one of Lucy's question, that language is a barrier, and indirectly you have said that if somebody wants to come to India, then the person needs to learn to speak in English at least, if not the Indian languages. And a couple of other points that you very rightly mentioned, I would like to put it this way. You talked about the simplicity and the good-natured people that you see here from Japan. I think that is where India and Japan have a lot of similarities. But when you talk about sincerity and punctuality and being committed, that is where the Indian we need to focus more and adhere to their requirements, because there are certain policies which cannot be broken. While Lucy will have a lot of similar experiences, I will go to her later after I ask the next question to Ashish, because it is important to have somebody who could share a different perspective, and then we'll come back to somebody who has a similar perspective. So Ashish ji, I like to get your thoughts in terms of, because you have worked with a lot of European companies. So what do you think is the perception that is there in their mind about India? And do you see that that is the perception? If it was good, it is changing now, or if it was not so good, it is changing now. What are your thoughts, Ashish ji?
Right. So, Dhaval, first of all, I must say what Pramodji mentioned, there are a lot of similarities between the Japanese and the Germans. And to be honest, I've really worked most with the Germans only. I mean, Europe is huge. So I've worked primarily in the Western Europe, in the German-speaking region. That is primarily the Germans, Swiss, and the Austrians. So a lot of similarities between what Pramodji just mentioned about. I think a couple of things which I can just add on to is, along with being simple, I think it's very straight. At times, it can be perceived to be very blunt or rude from an Indian, perspective. But there is no running around the bush. It's really on the face, and that's fantastic. In a true business sense, that is what you need. That it should be clear, simple, and on the face. So that helps a lot. And another very important characteristic of, let's say, the part of world I've been associated with is these are largely family-owned companies,
Right.
and these are amazingly huge family-owned companies. And we are talking about, if I start conversion from euro to Indian rupees, I mean, we are talking about a couple of thousands of crores of companies which are still owned by, families. So the value system is extremely strong. A value system in terms of investment values. There is a lot of depth. There is a lot of importance which is being to in-house technology development, investing a lot in research and development. And that is what gives them the bandwidth, or let's say the patience, to still be in the game. As was pointed out earlier, it's again not a hire and fire game over here as well. I mean, people stick around. I mean, yes, it's a very, very cautious, risk averse investor segment, especially when I talk about the Europeans, the Germans. But once they've committed, then they are 200% in the flesh. Then there is no looking back. So I think that's extremely important, and that's very, let's say, unlike the way we do business in India. They would really check it 10 times before really taking the call. But once you've done it, then you're in it, right? So that's it. Let's say from one more from a behavioral point of view. But let's say if we talk from the perception of an investor looking at the Indian market, as you asked me whether it has improved or not, it has significantly improved. I personally was associated for good now 5-6 years now, since this whole Make in India initiative started. We started a similar kind of program in Germany called Make in India Mittelstand, which was under the leadership of the Indian ambassador to Germany. And this program has been running for the last, now it's in the 6th year. And so in terms of the responsiveness we have got from the German companies has been extremely positive. In terms of perception, I mean, there are two forms in which, let's say, to put it very simply, there are two forms, right? Of how a market is perceived. Either you sell in a market or you source from the market. Now, selling is very simple, straightforward. Sourcing could be in terms of tangible goods, or it could also be in terms of services, design, engineering. So perception is still, I would say, very high, high as in positive when we talk about from a sourcing standpoint. When it comes to selling as a market, I think the attractiveness is, I would say, more medium. It is not highly attractive, primarily because of the price quality position which India has. Because for most of these multinational companies, I mean, the kind of contribution India would make to their top lines would still be in single digits. I'm saying most mid-sized companies. I'm not talking, we are not talking about the large corporates. I mean, Suzuki is probably an exceptional example over here, wherein the India share would probably be it probably would be the most significant probably market outside Japan. But largely speaking, it would still be from a strategic perspective, not in the A category, it would still be in the B category in terms of attractiveness. And I think lastly, to conclude my point, I think after having spent, once these companies spend a couple of, let's say, months or years, the realization becomes more and more solid that you need a very India-specific strategy. You cannot confuse it with any other Asian country, because this is, I mean, we have a lot of uniqueness in terms of products or pricing or distribution, or so this needs to be really adapted to a very India-specific strategy and implementation approach.
Got it. I think very, very clear, Ashish. I think very, very critical points and very to the point discussion, Ashish. Thanks for this. And Lucy, now, as I said, to start with, my question continues. How does Taiwan pursue India, and what are the differences that you see in terms of culture and the way investments are made? To add to it, the next question that I would have is, when you look at the registration requirements, there are certain registration requirements in India. Taiwan has its own tax law and the FEMA exchange control regulations. In terms of the registrations requirements, how do you see there is a difference between India and Taiwan?
Okay, thanks. So in general, registration process in India, I would say it's somehow similar to that in Taiwan. I mean, investors need to fill out some application forms and provide some supporting documents, such as a list of shareholders. And if there are any foreign identity, notarized copy of passport or foreign corporation documents are requested. But I do find some key differences that most Taiwanese companies are not get used to. For instance, the very first one is the resident director. So every Indian company requires at least one resident director, and this requirement does not exist in Taiwan. So, but this is a really, I mean, a big challenge to our clients, because we know that direct responsibility of directors in India is quite high, right? And finding a reliable one is then quite difficult. But I do know that there are some professionals, they provide like nominee director services. So I think the very first important thing to confirm whether they can start a company is to find someone that's reliable. So I think that's step one, and that's the biggest differences that I found. And I think the next differences is during the incorporation process, there are some requirements that's totally different. For instance, the digital signature certificate. I recall my very first case. I worked with Dhaval, and we tried to figure out what exactly the digital signature certificate is. And he then gave me some pictures saying that it's like a USB. It's a small thing that you can just do it and do a lot of filings, but you need it, you cannot lose it. But in Taiwan, we do not have that. And by simply explaining this idea or concept and how it works to our clients, take a lot of time. And also, each director needs to have such digital signature certificate. And who should keep it and how to use it when doing the filings actually create a lot of troubles. Because in general, most of my clients, they would expect the nominee director can do everything, including using the digital signature certificate, because the rest of the directors might not be based in India, right? And if the nominee, I mean, if the resident director cannot do the work. Our client need to handle it by themselves. But that's totally difficult because our clients are not familiar with the government website and how they complete this without a really clear instruction. So I think that's another trouble that we'll face. And the third thing I would say is the new requirement regarding the periodical update of the Know Your Client KYC requirement of directors. So that's totally new. A few years back, there's no such thing. But then I recall, I think it's like 2 to 3 years ago, there's this new requirement come to place within, I would say, short period of notice. And all the foreign directors need to take videos of themselves and then reading a paragraph of narratives claiming that all their information is correct and setting up a few like one-time passports, one to email and one to mobile numbers. All these things are not, I would say, not giving notice earlier enough for foreign investors. So I think that's something, and in Taiwan, we do not do KYC of directors to companies. Only KYC, I mean, the KYC process is only required to banks. Yeah, when you open bank accounts. So yeah, so I think that's something that's slowly new too. And the last thing, though quite minor, but I would say create a lot of problems when registration a company is the ink. The ink of the color of the ink, how you sign your papers, and how you do the self-attestation. We don't have such concept in Taiwan. So even by explaining how it works, takes a lot of time. Yeah. So I think that's the main differences that I found comparing to what we have in Taiwan. Yeah. Thanks.
Got it, Lucy. I think very practical examples that you have brought out. From an Indian standpoint, let me just try to tell one thing that as everyone knows, India is moving to a more transparent economy, trying to plug the loopholes, trying to plug the malpractices that were going on earlier. That is where India is right now. It is in the first stage, and therefore the processes that are introduced to ensure that there are no wrongdoings, they are currently at a very nascent stage. I am sure India is going to evolve, and in a couple of years from now, I would expect that you will have a different response in terms of the registration requirements in India. But I take your point, and it's a very valid point, that for somebody coming from Taiwan would definitely feel that what is this? I mean, we have never seen such stuff in Taiwan, and that is where professionals like us, the audience that we have today, I think they are going to be the key members who are going to explain to their clients as to what is the difference between the registration requirements in the overseas jurisdiction and India. I think that is a very valid observation, Lucy. Thank you so much for your observation. We move on to the next question. All of us would have seen certain roadblocks, certain bumps in terms of assisting foreign companies setting up in India. If I can just ask each one of you a couple of instances or one instance each which you thought could have been avoided but ultimately resulted into a roadblock in terms of registering the company or certain other registrations. Pramod ji, if I may start with you.
See, initially, maybe you can say in 2015, there was an issue while registering the companies. But after government has introduced EBs, I think a lot of registration, you can get it at one go.
Right.
So government, and now if I tell you FRRO process also, when I joined in 15, it was totally manual process. You have to make the file, then within 14 days, that Japanese has to attend, and then only you are getting. Now it's very simple. You just put it from your desktop, from your email, and everything will be coming online. So I think in India, what I will say, there are a lot of ease of doing business, lot of good thing is happening.
Right. I think yes. Pramod ji, thank you for the positive thoughts that you are sharing. I think that's very important for Lucy sitting out there because she can share these experiences with the clients of hers in Taiwan that India is moving towards a positive direction. I think that is very useful, Pramod ji. I think I cut you short, but you had something else to share, Pramod ji.
No, like now we have a COC certificate of coverage from Japan, so no need to even deduct PF in India. And however, you have to file the return. You have to ensure, okay, you are filing your return in times for all the expert whom you are not deducting even their PF. So things are, even what I can say, things are moving into right direction, into a positive direction.
Sure.
And if we talk about Japanese, they are very clear about their rules and regulation and their laws. I don't know why we are not very clear about our rules and regulation. We should say this is the law you have to follow. This nothing can be. See, when foreign multinationals are coming in India, they are coming to make money. They are coming here to make money, and definitely they are making money in India. So what is left out? What is wrong while following the rules and regulation of the country where you are making money?
Sure, sure. I completely get your point, Pramod-san, and maybe I'll let Ashish add to this if he wants to add or respond to your comments. I better stay away from this discussion. Yeah, Ashish, please.
No, I mean, so we are having a good discussion here. I like it. So Pramodji, with the, I'll be again, I'll take the other stand over here. Speed bumps regarding your question, Dhaval. Yes, I mean, there are issues which come up, and we are not talking about established companies. We are not talking about businesses which are running for years, where processes have been set. We are talking about guys who are just setting up businesses now. And yes, in the initial phase, everybody faces, some bumps, which are largely due to ignorance or poor advisory. Um, I would largely blame it on these two things, right? Because any external party who's coming into India needs support, and advisory support becomes the most critical over here. Now, if the companies land up with the inexperienced or unprofessional advisory over here, then it surely is a very bad start. So advisory becomes very important. Apart from advisory, I personally think there is so much more which can be done in making banking easier, especially in the initial phase. I'm not talking about, everything is set and running and is smooth. No, I'm talking only at an entry point. And my experience with the multinational banks has been actually quite disastrous, especially in the initial stage. Um, and I'm not talking about Indian national banks, I'm talking about multinational banks. This can definitely be a lot more smoother. Banking is one area. And then this is one of my favorite topics, the documentation requirement which a foreign company is expected to file in terms of that is the easy part, because they know their company, they know all the documents, and yes, there is a non-English element, so you need to get it translated. But then after translation, we get into notarization and apostillization, and believe me, it is painful. I mean, why do we need all this? I really don't understand. And I just think it is highly inefficient. It is not adding any major value on top of, what is already established. I think this just, so it's very easy to say that, the company was incorporated in 24 hours. That's a wrong statement, because to prepare the documentation which made it happen in 24 hours took probably 30 days. So we need to give the true picture here, that yes, the incorporation might have taken 1 day or 2 days, but the whole process started, I don't know, 30, 40 days back. So we need to give the true picture, especially when it comes to the guys who are doing the advisory part, that don't paint, a very optimistic and very flowery picture. Give a realistic, estimate in terms of resource requirement, in terms of time requirement, because based on that advice, people are going to invest. So you need to make it as transparent and as uncomplicated as possible.
Got it, Ashish. I think it's going to be a 2-on-1 discussion, because I'm sure Lucy also shares the same feeling that you have, Ashish. So maybe I'll chip in wherever required so as to support Pramod san. But Lucy, I think Ashish, on a serious note, what you mentioned, one is ignorance of the law and documentation requirements. I think spot on. That is what we as professionals need to bring to our clients. We need to make them aware as to what is it that is required. In the initial meeting, as you said, let us not create an over-optimistic picture. Let's be realistic, give them the real picture, and then share the requirements. And poor advisory is another reason which you pointed out. I think that is advice. I would believe that the time that you spend, a major part of your time has to be on the advisory part, so that your execution becomes simpler. I think that is a point that you very rightly made, Ashish ji. Lucy, your thoughts on this? I think you have ideally mentioned all the roadblocks. You have given me a good number of examples that we can take to the government. But any other experience or thoughts that you would like to share, Lucy?
Yeah, I think my overall experience is it always takes forever when there's something that needs to be updated. Seriously, no kidding. But I think besides all the documentation issues, I think one thing that I noticed a few years back when I helped my client entering India is the labor law aspect. So my clients, they trying to incorporate it. I recall it's in Mumbai, and they are thinking or planning to set up factories across the countries. And then initially they are saying that, oh, can we just develop a standard human resource policy that apply to all sites? But then we figure out it's impossible, because labor laws, it varies by the country level and varies by locations. And by that time, it's even hard for us to find one single lawyer that's capable and knowing related labor laws across the countries. So it took us a long journey to put together all the pieces and develop a very first draft of the human resource policies. Because and then the client knows that if they do not, they are afraid that they miss anything. So I think that's one thing. I don't know now if there's any improvement, but by that time, I think just 2 years ago, my experiences in relation to labor laws still like falling pieces. Yeah, falling apart. Yeah.
Okay, fine. So as I promised, I think I'll use the veto to add a couple of points here, and then ultimately my role is to reconcile the thoughts. So effectively, Pramod ji has a bit more patience level, is what I would like to say, and he believes that one needs to spend time in understanding the regulations, and that is exactly what Ashish ji also mentioned, that if one understands the law properly, a lot of time could be saved. But yes, I think where the point is that there are differences between jurisdictions, and both the parties have to understand that there are going to be different laws. Now, who can bridge that gap and make each other understand is what we need to see. So I think I will like to stop it there. And now there are a couple of rounds of questions that I have for each one of you. I think Pramod ji, you mentioned about your experiences with FRRO and tax compliances of expatriates. So just from, while you may not go into the details of it, but broadly speaking, how do the expatriates take the Indian tax compliances? Are they afraid, or are they open to sharing their data? How do you plan about it?
No, in fact, Dhaval, see, our FRRO or expatriate work start much earlier when we goes into an agreement with your parent company. So that is very important how you are drafting your agreement, because what is written into agreement. I'll just give you one example. In agreement, it says that you have to provide a car to the employee. What about his family? If you have provided a car to his family also, then it becomes his personal expenditure. So you have to be very careful while drafting stage of the agreement. So if that goes correctly, then everything will go correctly. So each and every level you have to make a very clear process. Okay, how you are going to ask for expatriate, whether there kind of a requirement, then requirement should be approved, then you should ask to your parent company, do you have that kind of experienced person who can support us our operation. Then once they say yes, then you have to send their an invitation letter. After invitation letter, then you have to in advance nowadays you have to ask those person, please send me this following information to file your FRRO application itself. So this kind of process are there. So what I say, FRRO is a very later stage, but initial stage while we goes into an agreement. So if your agreement is correct and your processes, okay, what time, when person is coming, you have to start applying for FRRO. So these are very important things. If you have a clear-cut policies and process, then you can deal very clearly on that.
Got
So
it.
thereafter,
So
there will, I don't feel that.
Sure. Please
So
go ahead.
thereafter, there will not be any issue. And
So,
what Lucy has just mentioned about this labor laws, yes, I understand. And now you must have heard that our parliament has passed an resolution where 29th of labor laws becomes now only 4. They merged 29 labor laws.
there is always a silver lining,
now
is
we
what
have
Pramod San is trying to say.
Yeah.
Yes.
Sure.
Improving. What I'm saying, things are improving.
Right. So I think a couple of points that Pramod San mentioned was, planning and taking actions in advance. I think these are the proactive steps that we should expect our clients to take in order to ensure that when we do their compliances, there are no hiccups. I think thank you, Pramod San. Ashish ji, a very critical point. We are chartered accountants as professionals, and primarily our role is to focus on audits or books of accounts or undertake tax compliances. Do you see that the role of professionals like us has now changed, or companies have started expecting more from chartered accountants or advisors, if I may put it in a larger basket? How do you see it?
I think one of the key things would be the know-how of the sector your client is operating in. I think that helps a lot because, and that's purely my impression. I mean, sectoral know-how, I would really say, should be a must, rather than just carry out the services of a classical chartered accountant. I think you will be able to do more justice to your client and definitely your, let's say, rapport, or let's say, from a client point of view, it's going to be a long-standing relation then. So sectoral know-how, I think, is becoming more and more critical right now. That is one thing which straight away comes to me. I mean, from a CA point of view, but if I look at, purely from an advisory standpoint, now since I've been on both the sides, I have become a lot more demanding right now, which is also audible from what my views have been so far. And the reason here is that, there is a difference between advisory and actually implementation, because now you're in hardcore implementation. So it is no longer restricted to boardroom discussions and a PowerPoint presentation. You actually have to do it. So it's got to be a pragmatic approach. It's got to be something which can be implemented, practical, right? So it's nice to have concepts, and so I'm not trying to kill that part, but I'm saying we really need to make a difference between the theory and the practical part of it, and that is where I think there is a lot which can be bridged from advisors, and not necessarily the chartered accountants only. I mean, we need a bottom-up approach. Somebody who's really on the field, yeah, he is really the one who should be able to do the whole, advisory or of any sort, I would say.
Got it. I think Ashish ji, so your point is very clear that a consultant or an advisor. I've always heard this phrase, and I like it, that never be a consultant, always be an advisor. So when you are an advisor, you are closer to your client, and you get into his or her business and explain the business nuances to your client. I think that is where, Ashish ji, your point is very important, that as professionals, we need to be aware about the business. The more we are aware about the business, we'll be able to bring value to the table for our clients. I think that's very, very important. And I think from that point, I'd like to move on to Lucy now. Lucy, Ashish ji mentioned about knowing business. As a consultant, you should be aware about the business or know-how of the client. So as a consultant, do you believe in that? Do you actually practice in a manner wherein you know about the business of your client in detail? And what is your expectation when you are working with an Indian CPA? Do your expectations change, or as a foreign consultant and not as a company? When you are a consultant and you are talking to your counterpart in India, what is it that you expect?
Okay, so yes, I do agree that we need to know the client. That's very important. The way that we introduce how it works, how to do in business in India could vary. Depends on what kind of business that the client is doing. When they are manufacturing client, if they are distributors, it could vary a lot. So I think that's very important to know. And a lot of time, there are many reasons why multinational company decides to invest in India. It could be a quick decision. For instance, the entire supply chain or customer has shipped their production facilities to India, so they move it together as well. Or they just see some new business opportunities in domestic markets. But when they make such decisions, they actually have quite limited knowledge regarding tax and legal requirements. So I think it's very important that local consultants, or we expect local consultant, can provide an overview, customer by industry or by locations, and share with the clients, so that they can easily get a high level understanding within maybe like a few weeks. I mean, they do not need to know all the details at the beginning, but they need to know where they should start with. So I think so if local consultant can prepare like a roadmap things, step by step, and I think that's very good to start with. And I think on the other side, I would expect that I think it's probably because Taiwan is comparatively a smaller country, so clients expect us to know everything. They expect us to know who they should look. They expect us to refer lawyers to them, refer them vendors, refer them landlords, or refer them a lot of things. So I think for those aspects outside of tax, it's still good to get connected with. Even if, so I think that's one of the expectations, because I think not just Taiwanese companies, but most of the foreign investors, because they are new to this country and they have limited time and limited resources. So if if local consultant can provide like a total solution services, I think that would be much better. Yeah.
Got it. So I think there are questions from the audience also. So maybe I'll take one or two questions and maybe swap the questions that I had thought I would ask, because the questions that the audience has raised are more interesting, is what I believe. So and it is an interesting question on labor laws, and where to my happiness, Ashish ji and Pramod ji shared a common thought that for labor laws, yes, currently there are certain issues, but things can improve. So the question is, as far as labor law is concerned, generally we experience that even if you comply the labor law formalities, the labor union, intermediaries, MLA, etc., are becoming barriers for the investors, which results in a lot of loss of money, contracts, and reputation. So what are your thoughts on this? So I would give an option to either Ashish ji or Pramod san, whosoever wants to take up this point.
You want to hear the positive side or the negative side?
I am sure I am going to get both the sides, either of it speaks. So,
Pramod ji, why don't you start?
See, the question is very valid. Yes, there is an issue, but now, like the way things are moving ahead, so this labor law and middleman and what we call union and all, these things has to be there. In Japan also we heard that they have a union, but union is for what? For doing betterment of their labor, not to stop the production. Here, the meaning of the things has been diverted. We have make it politicize it. That is the problem. If let labor union has to discuss their issue with the management, why the politicians are coming into it. So these things need to, I think, understand. And nowadays, that's why companies also taking a people who are like educated, who understand, okay, what is his benefit, why he's coming in between. Because I know we were, when I was with General Motor, we had a labor issue and somebody is handling from outside. After 52 days, I was also asked, you please come and join the negotiation. When I discussed with this labor union president, I said, whatever he is asking, management is ready. What is the issue? I was not able to understand, and I told our HR, but what is the issue? Whatever whatever their demands is, and management has already told you, this is management budget and this is what they are asking. So I don't feel any. So sometimes this kind of issue has been created. So from the GM experience, I could say sometimes this kind of issues has been created, which is not right at all. And I don't know why this political people are coming in between. There is no role of theirs. Let labor union should discuss with the management. That management should discuss with them. Why they are coming outsider people? What is their interest? So yes, that kind of issues are there, but slowly, these things will go off. That's what I think.
Got it,
So
Pramod. Yes, please.
The good news is that I completely agree with Pramodji, what he said, and I think he said something very important. The problem is not with the labor union as such. It's supposed to be for a purpose, and that's absolutely fine. The politicization is the one which is the nuisance over here. And just to add on to it, you will not hear of such things. I mean, this is specific to manufacturing sector primarily, right? And in the manufacturing sector also, the more rural you get, the more painful it becomes. Because then the district level MLAs and all these guys, they start intervening it. Now that is the part wherein, uh, enforcement needs to be implemented, not just at a state level, but really at a district level, because that is the part, for example, right now I'm really sitting in the middle of nowhere right now. It's in middle of farms, and we do it's not a big topic as of now, but on and off it comes in, that you've got the local MLA wanting to, try and interfere in certain things. I think it is all politicization. The local people are very simple. They are looking for employment, and just keep it simple. Pramodji, fully agree. That is the problem over here. The problem is not with having a labor union.
Got it. I think so. What I understood. So I think both of them agree to a point that you don't need intermediaries between a labor union and the company.
Yeah.
I think if there are any issues between the management and the labor, then they can internally discuss and come to a cohesive answer towards any issue that they may face. I think that is broadly what we understand. And absolutely, there is no point in politicizing any labor issues. That is unfortunately a case in quite a few companies in India. Hopefully, the way governance improves, things will move into a better sphere. So I think that was an interesting question that we had from the audience. So with this, I think what last question. I think we'll take up the last question, and again I'll throw it up to all the three of you to answer. What changes do you expect to see in the future India investment front? For example, Lucy, I think we would also like to hear from you. You might be aware about the new policy that India is not going to easily approve investments coming in from mainland China. And we see a lot of Taiwanese companies which are into the electronics segment who are looking at India as the new investment destination. And Pramod ji and Ashish ji, you can also add, because Japan also has adopted a China +1 policy, and of course a lot of German companies are already there in India. So in terms of the new investment opportunities that you see, and correspondingly, how can the advisors take this as an opportunity for them in terms of advising more companies coming in from outside of India. So I'll throw it open to you, Lucy, if we can start with you, and then I'll move on to Pramod ji and Ashish ji.
Oh, sure. I think there are more and more foreign investors are interested in investing in India. But so as a local young professionals, I think it's important to identify where of the foreign investors that you want to focus on. For instance, I mean, I know Dhaval for a few years, and I know he has been spending time with China or Taiwan investors. So I think with that goal set, it will be helpful to know some basic regulation of these countries. So then once you identify the differences and you do your own comparison, then you will understand that what are the differences in key areas that you want to tell those potential investors. So I think that would be more efficient. Yeah. So I think that's the first thing I wanna share. Yeah. Thanks.
Yeah. Pramod-san, your thoughts?
See, what Lucy son has mentioned, that is very correct. We need a kind of regulatory bodies, and now we are working towards it. And now, like as we already stopped investment from mainland China, so a lot more opportunities are available for Japan, Taiwan, and European countries. Definitely, and India is becoming a big market and may become an export hub going forward. So in that case, what I feel, the role of advisors is more. So advisor has to like guide them since beginning. Now I'll tell you, in this company, we have started from zero. I was the first person. Now after 5.5 years, we even don't have even single any issue with any government body. So this is how you have to maintain. If you have a good advisor, you have a good guider, so that is a good thing. So I think now it depends. We have to increase the ability of our advisors. So a lot more job and pressure is going to come on them. So they need to guide them properly. So that's what I can say. Opportunity is there. Ample of opportunity are there in India. See, as we said, now we are a 135 crore people country. So we have a lot more opportunity.
I think what Lucy mentioned, that Taiwan is a very small country, and still there is a lot of expectation from the consultants out there. Lucy, I must tell you that India is a country with 135 crore of people, and the highest expectation that you can see is from Indian CPAs. Whenever a company approaches a consultant or a CPA, they expect them to know each and everything, start with business or law. So I think the expectation is huge, and Pramod-san, as you mentioned, the opportunities are equally huge for the professionals out here. The idea is to understand the requirements and create a niche in a particular area. I think that is very important. Right. Ashish ji, yes.
Right. So Dhaval, in terms of what I would like to see, not only restricting it to chartered accountants, but I would really like to see a single window in true sense and not a layered window approach. That is something which I'm still missing. It is very professionally managed in a few states, but in a few it is still non-existent, or let's say it is partially existing. So that is one thing, and that is extremely important, especially when it comes to all these government approvals. And I'm really talking at an operational level, not really the COI and stuff like that. These are easy ones. But when you, for example, have to set up a factory, I mean, there is a long list of approvals which is required, and it is told that it's a single window, but it is actually still not fully implemented. So that is something I would really want to see. That is one. The second thing I would like to see is more of agreements getting, agreements, and not just MOUs and LOIs. These are again political documents which are made to keep I don't know who happy. It serves zero purpose. I would really want to see agreements, something which is bankable, something which is again legal commercial documents. No politics around it. I would like to see a lot more transparency in terms of implementation, and not just about this much FDI came in, but how much of it actually got realized, how much of it actually got implemented. Yeah, I think this is where it is very important to, where the role of the advisors, become very critical over here, because to, let's say, some extent, the success of that company, or maybe success is a little too big word, but at least success in setting up of a company is largely dependent on, chartered accountants and consultants or advisors, and therefore it needs to be, the advice needs to be simple and clean. It has to be implementable. It has to be realistic, supported by facts. And last but not least, you have to believe in that feeling you have in your stomach. Your experience has to come into play. It cannot be just a statistical exercise. So one has to really, to some extent, be a little bit more intuitive in guiding people. Yeah. So that's about it.
Sure. I would like to just respond to a couple of points that you mentioned, Ashish. On the single window, I completely am in agreement with what you are saying. I think most of the states boast that they have a single window facility, but if you look at it in a realistic sense, a lot of states are still missing that. And I think that is where advisors and consultants can also represent to the state governments or local bodies, and ensure that each state becomes a country in itself in terms of attracting investments by having a single window facility. And I'm sure this time Gujarat at least has promised a single window facility. Let's hope it sees the day of the light soon, sooner than later. On the MOUs and LOIs part, on a lighter note, I just expect that we'll see more Suzukis and more Verbios who sign MOUs and LOIs and make actual investments into India. And we'll see a lot of Pegatrons and Foxcons coming in from Taiwan to India to make further investments. I think these were a couple of thoughts which I wanted to share towards the end of this session. Gentlemen and lady, it was a wonderful panel discussion that I had. Thank you so much for your time. Lucy, I'm sure you are missing out on your dinner. It's already dinner time and past that in Taiwan. But I'm grateful that you spared your time for this panel discussion. Pramod-san and Ashish-ji, right from the farms, and Pramod-san taking out time to be amongst us to share their experiences. Thank you very much, everyone. I pass it on to Vishal sir now.
Thank you.
Thank you.
Yeah. Thank you, Dhaval. Thank you, Lucy. Thank you, Pramodji. Thank you, Ashishji. It was indeed a very, very enlightening panel discussion. And the best part was, everybody was speaking from the heart, and actually the panelists also, I would say, crossing each other. And that was the best part of sharing the live experiences that the Elite panel had. With this, once again, I thank on behalf of WRC, and I would now request my colleague, CA Arpit Kabra, to kindly propose a formal vote of thanks.
Thank you, Vishal bhai. And I think one word, if I were to say, this was a fantastic session and a brilliant session, where the questions are absolutely relevant and absolutely on the trot. So Dhaval, thank you for creating that, and thank you for making it so specific for all our participants today. And believe me, Madam Lee, Pramodji and Ashishji, I mean, the answers that you've given didn't absolutely look like it was just, it was absolutely pure professionals working for the benefit of the fraternity. I mean, that was the essence of it. And thank you for having created this session for all the participants today. I'm sure we've had a lot of takeaways in the entire conversation that we had. And the first question that Dhaval you asked, ease of doing business in India, and Ashish ji was really caught as to how to really answer that question. Of course, we are facing that so much, and as a professional, all of us know. But the way, sir, the deliberations were made, that gave a true idea of how a professional should really look up to things. Of course, there are challenges that all of us will face. And having said that, we still have to work around those challenges, which is part of every ecosystem, and keep working around that. So I think great, Ashish, that was really interesting, and thanks for creating all of that. More importantly, every other conversation that we had, I think there is a voice coming from your end. Will you mute? Thank you. So in all, the essence was fantastic, and Miss Lee, thank you for providing us good insights as to today everyone was expecting as to how could we serve people from different cross borders and all of that, and the insights that you've given. I think that is one essence, or maybe we should have that attitude towards giving our advisory and giving our services. So a good mix of consultants and a good mix of actual business owners really made a lot of sense today. And it was an amazing session. And thank you, Vishal bhai, for putting this beautiful session together for WRC.
I would just like to add, Arpit, sorry to interrupt, but on the chat box we have got a thanks for the GATE program on behalf of ICI Melbourne chapter, CA Pankaj Damle, Vice Chairman. So we have had international participation also for this important webinar.
So not only the speakers were international, but even the participants were international.
Yeah, right.
I was just short of becoming a popular face figure in television, as if holding a debate, live debate, and Pramod san and Ashish ji making it very interesting with inputs from Lucy as well.
So really, it was actually the nation wants to know types, but yes,
it was much better managed.
Right. Very well conducted, and once again congratulations to all of you, and I'm sure all the participants, you would have had a great time. And should you need any further assistance or any further questions that you may have, please feel free to reach out Vishal bhai or me or even Dhaval is also very approachable, and if you have any questions for our speakers, you may send it to us. We may definitely put it up to them, and their response, they will be happy to connect with you directly. And any further feedback or suggestions that you may have, please feel free to get in touch with us. Thank you, everyone. Stay safe and take care. Over to you, Vishal.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you, everybody. Stay safe.
Thank you, sir.
Bye-bye.
Thank you. Bye-bye.
Bye.
Bye-bye. Take care. Bye.
Vishal bhai,